Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream. Hey everybody, welcome back to another live stream. Thanks for being here. Hey, you know, we had a comment, just to show you I am paying attention to the comment section. We had a comment come in yesterday that I thought was a great idea. And you may already notice it if you're an Edge Finder super fan or user every day. I don't know, I'm getting used to this, but there's usually a white bar that comes across the screen. In fact, I'll show it to you. It's usually right here. Well, somebody recommended that we find a way to hide that view. And I don't know, I feel like it looks, I don't know if I like it or dislike it. Maybe I've just used Edge Finder for so long myself that I like having the white bar. But can I ask you guys a question? Do you like or dislike the white bar? I know this sounds like a trivial question, but I'm genuinely curious because do you guys like the white bar or not? Let me ask you this. If you like the white bar, give me a 1. If you like the way it looks without the white bar, give me a 2. Now, this is a header. So if you're pro header, give me a 1. If you're anti header, give me a 2. 1 pro, 2 anti header. Cleaner without it. I might have to, if the vote is too split. Okay, I see somebody spamming 2 like 37 times. That doesn't change the vote. I may need to let that one go to a poll. I don't know which one I like more. There's pros and cons. One of the big pros, one of the obvious pros, is it gives us more screen room, right? See, when this is on there, it kind of blocks what you can see. When it's off, you can see a little bit more at the same time. I don't know. I kind of like the white bar look, but I also like the full screen effect. It's, I know it sounds trivial, but I know a lot of you guys who use Edge Finder every day, this stuff matters. Like when you're looking at it every time or every day, how it appears, how it showcases matters significantly. So I do value your input on that. Look at this. Edge Finder's giving S&P 500 a flat 0 across the board. Don't usually see such a neutral reading on S&P 500. Let's take a look at it. From a technical perspective, I don't disagree. This thing has been a chop fest. We have not really made any advance or decline on this one. But yeah, I think that's going to go to a vote, guys, on the white bar at the top. Leave it or keep it. We do surveys all the time with our existing customer base. We'll probably throw that to a vote. See what you guys think. And thank you to everybody who does leave that feedback. It's super valuable to us because, you know, if you're using it every day, your input matters a lot to our team because then you have a good, you know, understanding of how it works, etc. NASDAQ also a little bit of selling pressure here recently, bounced back pretty decently, although, man, it is a minefield out there in the stock market. Like individual stocks, there's a lot of them that are just getting hit so hard here recently. I show you, for example, the IGV. This is the software sector ETF. This thing is getting slammed hard. Yesterday, there was a really popularized article that went around. You can go read it if you want. I think the title of it is Something Big is Happening. I think that's the name of the article, some ominous name. But basically the idea, AI is just accelerating so much faster than anyone thought it could. And it's kind of scary. Like, to be honest, I think there's a natural response when you hear that to be like, that's freaky. Because a couple of years ago, basically the article gives us the idea that a couple of years ago, it was hard to trust AI to do even math, right? Now, AI is capable of doing so many things, and it's projected that in a few years, it'll be able to do everything better than all humans. It's like, that's a terrifying, but also amazing and creepy thought. But anyways, there's a lot of companies who are getting sold heavily in response to this because investors are worried that, hey, you know, if AI is capable of disrupting entire industries, you know, what's to stop it from taking away the moats or the advantages of a lot of these businesses? And I actually think that there is some valid concerns there, that you could have a lot of really great businesses today get disrupted. Now, I don't think all of them, and I think there's some excellent companies that are getting sold way too hard, but it's just an interesting phenomenon here recently. And so tech, the NASDAQ, has been kind of jittery recently, even at the highest level. Like, it seems like nobody is fully safe except for what they're calling the halo stocks, which are like hard asset stocks. Think, for example, Texas Roadhouse and Costco and Walmart and all these, you know, physical companies are actually thriving in this. Take a look at Walmart. Walmart is a monster right now. The stock is just going up because this is perceived by the market as just a straight up AI beneficiary, right? And it makes good sense. If they can optimize what they're doing at Walmart, optimize inventory, optimize headcount, it's just a straight win for Walmart, as opposed to Intuit, which, by the way, I like this company. But the market's perception is, hey, you know, you can get ChatGPT to do your taxes. You don't need a TurboTax. And so this business model is no longer as attractive, right? So I think that you have this interesting dynamic at play where you have, you know, a lot of companies that for years and years and years, investors looked at as the place to invest for higher than usual returns. Software was that. I mean, you have, again, the IGV has been a monster performer for a very long time. And then recently, just falling off a bridge down 30% real quick. It's a fascinating time, I got to say, in terms of investing land. Amazing how the narrative can suddenly shift. And we go from tech everything to physical assets are the winner, right? What's winning this year? I'll tell you what's winning this year. XLI is winning this year. Industrials, those are physical companies building roads, building trains, cranes, automobiles, you know, flying people to different places. Physical, real world stocks are killing it. Digital stuff is getting whacked. It's really fascinating. Not all, obviously, but a lot. And we can expand this. XLE, energy companies, right? You need a lot of energy. What about power companies? Power companies are back on the rise here recently. It's just fascinating how this, you know, this makes a great case for why a diversified portfolio is so attractive to many investors. Because, look, if you had heavily weighted to software a year ago, you are getting decimated, right? Whereas if your portfolio for the last few years, if you had energy sitting in it, you felt like an idiot. You're like, what am I doing with all this energy stocks? They're not doing anything. And then suddenly, boom, there comes that new narrative, and energy stocks are very popularized. So I just thought it was an interesting kind of change in the market conditions. If we take a look at gold here, gold has also been a big winner here recently. Of course, barring the big drop off that we had, you can see it's actually showing some resilience and bouncing back here. I do think that when you look at gold on the 4-hour time frame, we watched this level yesterday. I'm watching for a breakout here. I do need to check edge finders. After everything that took place yesterday, we do still see gold with a, let me just refresh this, make sure it's up to date. Edge finder with a neutral score here on gold. Technicals looking positive. Sentiment looking a little bit mixed. Crowd sentiment went bullish on gold, so a little bit of a bearish contrarian one there. And institutions still leaning a little bit more towards the sell side, at least recently. Now, aggregate level institution from the long-term perspective, they're still very bullish gold, but recently have been doing a little bit of selling based on our week-over-week change calculations. So kind of interesting to see that. Retail sales numbers came in worse than expected. That's perceived as bullish for gold, but at the same time, yesterday, you had a smash hit jobs number. There was all sorts of market moves following that, but just taking it for what it is, that was a strong jobs report that strengthens the dollar, at least on paper, right? We're seeing the dollar make moves all over the place. You can see yesterday's price action was very mixed, but I would still take that as, okay, that's a supportive theme to the dollar. That's not necessarily super positive for gold. So I'm watching price action here. I'm really curious to see if we can get this kind of solid breakout above 5,050 an ounce. Maybe you can start to continue climbing back up on gold, but I really have too much of a neutral reading to go out and place big trades on gold at this time. From a longer perspective, I'd like to see lower prices for buying and holding kind of thing. But in the here and now, I just don't have enough conviction to take a trade. That's going to extend out to silver as well. Silver on the 4-hour time frame, you obviously have some pretty critical resistance around 92. You have support around 72, right? So we'll see how all that plays out in coming days, but not a lot of movement. Oil, I'm watching. I would be really curious to see if you can get, myself, you guys know I'm a momentum trader. I'd love to see oil breaking through these highs back above 66. That starts to look like an area where some would tell me I'm late to the party, but for me, I'm a momentum trader, so I don't mind being a little bit late. I'm looking to catch what ultimately could be, if we have the right fundamentals. Of course, CPI's tomorrow. And we have 30 seconds to go until unemployment claims, which could move markets as well. We'll just go ahead and switch over here so that we can watch our full market view here. Let's see, there we go. And then going to switch over here just to see unemployment claims. So expecting 222,000 unemployment claims this week, or on our weekly jobless claims. Let's see what we get here. About 15 seconds to go. So what I've got on the screen right now for your convenience is the S&P, NASDAQ, gold, silver, oil, dollar, Bitcoin, Dow. So you can see a little bit of everything all on the screen at once, and we can see how this impacts markets. Should be dropping any second. Let's see if it causes any stir. Weekly jobless claims are very hit or miss. They can cause moves. They can cause nothing. Just kind of depends how the number falls. So far, not a big move. Let's just see if those numbers did drop. Yep, 227. So this is a slight miss, but nothing of substantial significance here. A 5K miss is pretty marginal, pretty small. So nothing huge on that front. So now what we can do is we can go ahead and bring in my friend Chris Pulver to take a look at some markets here with me. He is here in the backstage, ready to go. Bring him in on the conversation. Hey, Chris, how you doing, man?
Good morning.
Good morning. Where are you tuning in from?
I'm back home, but I am across the hallway in a guest bedroom. It's just me and the 1-year-old today. He's still sleeping. It's 6:30 my time.
Gotcha.
So there might be a little creature crawling in the background here in a little bit. So I'm waiting.
Love it. Love it.
Well, anyway, is my sound okay? I'm like minimalistic here, but hopefully enough to get the job done this morning.
You sound good. You sound good. Perfect. Chris, so since we talked, of course, we had the jobs report number come out yesterday. Jobs number were pretty solid. 130,000 jobs added compared to forecast of 65K. You had unemployment rate tick lower. And yet, stock market's reaction was kind of mixed. In fact, that's kind of what I expected was, it's enough jobs data or strong jobs, which is good, obviously, for for the state of the labor market, but at the same time, the stock market kind of loves the idea of rate cuts. So that one was a little tricky. What was more interesting to me was that the dollar index shot higher. And then I don't know if you watched by any chance, if you saw dollar yen yesterday. We talked a lot about how on a 1 minute candle, just a couple minutes after the report yesterday, there was something fascinating that happened. You had this move here, big shoot up, and then 9 minutes later, a giant drop in the dollar yen specifically. And I think that may have been a little bit of Bank of Japan selling of UJ. I don't know. Thought it was interesting.
I think that I did a little deep dive last night in some of the yen crosses and the Bank of Japan and how everything is really interconnected. I think that the U.S. and Japan are going to have to do something together to kind of keep this currency market from doing something silly in 2026. I think honestly, like a lot of things from currency sides, from debt sides, from yield sides, a lot of things just point back to gold. Like having gold and just being smart about how we're positioned for gold is probably going to be the safest trade versus trying to get stuck in all the noise that I think Forex could potentially bring. Now, we go back to gold. I'm on the same wavelength I've had the last couple of weeks, which has been okay. We had our big shakeout, big reality check. I could see gold getting back to the highs, trying to retest the lows. Maybe this 200-day moving average just spends time catching up as this consolidates. But if we still have a high, low, lower high, lower low, more volatility, we have another jump in the VIX into the 20s. We see what that does to the equities market. There's just I almost think like the way that it plays out in 2026 is the market will find a reason to flush stocks down, maybe get this 200-day tested on gold, and then it's like kitchen sink, Trump, Bessent, Warsh, the Fed, like anything to fix the market for 2026 and try to get any type of salvage momentum into midterms. But like I said, a lot of things just point back to what's probably the safest trade for 2026 and onwards, probably gold.
Sure.
But not big. I mean, I'm going to put it as a percentage allocation, but it's going to be probably 10 to 20% between gold and silver. It's going to come with volatility. I'm going to trade options around them. But I think that's probably one of the safest plays I could have to say this year onwards. More dollar cost averaging to gold, more levels, more accumulation, I think would be a good thing.
Yeah. I mean, I think that you have a number of reasons why gold still on a longer term basis seems strong, right? You have, of course, central banks. I mean, two of the world's largest economies are just like fully committing to spend money like crazy. Japan and US are just straight up on the wavelength of spend like crazy to try and stir growth. And of course, if they're successful, it could be a great story, but it can also, the one thing that we know, whether that story works or not, is we know there's a ton of money printing coming, right? And so that I think is where gold hears that and says, well, at the end of the day, regardless, money printing is everywhere. And we can also see that, we can confirm that theory with what bond market stuff is doing. I mean, we find ourselves, Chris, over the time, I feel like we spend more and more and more time just watching the bond market because it is like the most telling of all. We have Japanese 10-year yields moving higher. We've got, some stubbornness in the U.S. bond market as well. And these higher yields extend globally, right? All over the place. We have high, longer term yields. And so I think that this long, higher term yields moving higher and staying there is sort of indicative of what we're talking about here with fiscal policy that is stretched. National debts are very high, and we are projecting to spend even more. And so gold and silver, I agree with you from a longer term kind of perspective. Those are hedges that I feel pretty decently comfortable allocating something in the portfolio to. Of course, not financial advice to people listening. That's going to be dependent on your own risk tolerance, et cetera, whatever you want to do with that. But for me personally, I think an allocation to gold and silver is a decent thing to consider, given the nature of monetary policy, et cetera, over the long term.
Sure. The deep dive yesterday was you've heard of Ray Dalio's all-weather portfolio. Basically, it's 25%. It's 25% gold, 25% stocks, 25% cash, 25% real estate. That way, if one breaks or one has, insane volatility, it's not all in.
Right.
And I don't think that all four can break at the same time. I think something's going to be safe enough to keep you in the game. You're going to have, enough assets and allocations to survive. So I mean, I didn't think that my allocation would be that simple. I mean, 25 across the board seems light in equities. I'm more like, 50+% equities, but obviously I trade a lot of options. So I'm just, thinking a lot about client accounts and portfolio management. It's like, it's not a bad way to make sure that you can survive. Whatever 2026 is, it doesn't feel easy. Like right now we've gone nowhere, Nick, for 12 weeks. I mean, if you look at a weekly chart here, we're still sideways, man. I mean, we haven't had really any definitive gains since early December. We had that little surge during Christmas, and that was it. Like once we kind of get to 68.50, it has held those lows with long wicks. It's held those kind of bodies. We're stuck in this range. I think if we do break the upside with a convincing 7,000 break, I've got a measure move at 72. That's about it. I mean, I think it's going to be harder and harder to keep sustaining these upside moves. The fear that I have is that, 67.50, if it breaks, it's just so much easier to go down 2 to 700 points versus the upside is like, we go up a couple hundred points, and then what keeps it going? What keeps driving it? I get that the market can stay up. We can see positive gamma flows every single day. I know the market can stay bullish. In fact, I want it to, but when we look at sector rotation like this, when energy's up 23% and you have, software down, I heard you talk about the article in AI. I was just at a conference this week, and I'm seeing like more and more tasks it is boosting output for every worker if you're using it. And what I'm already lost in is there are names of AI softwares and services that I've never even heard of that people are using. Like, if you ever watched the Super Bowl, how many AI commercials were there? Plenty. Yeah. Right. It wasn't that long ago. Was it a couple years ago that it was like all about crypto during the Super Bowl? Now it was all AI. The one that sticks out was Matthew Broderick. I think it was called GemSpark. He's like, GemSpark, do this for me. He's like, then take the day off. And I'm like, don't you mean just get fired or have one person do the job? It's like, are people reading between the lines? Like, that's kind of what AI is really setting our labor market up for, is like one person's going to manage, and then that's it. So I don't know. And that's a terribly depressing future. But if we don't tame or give like a purpose to AI, we just let it be this, all-knowing being, it is self-learning. It's like, that's the scary part. Is like, we're not building AI to tame it. We're building AI to just like know everything, do everything. And I feel like that could be a bad thing when it's like synthetically building its own knowledge.
Yeah, it is bizarre. As you pointed out, if we take a look at year to date, to your point, you look at the index level and it's like the thing has done nothing. It's gone sideways. But then I don't think that really tells the story of what's going on underneath, as you kind of described there, right? You have all these different sectors, and there are some real winners and losers in here. If we talk about energy, 2026 out the gate, I know that you've been talking about this. Energy has been a huge winner. And I don't know if you've heard this acronym, Chris, but people calling it the Halo stocks. Of course, people always come up with acronyms. It's part of the fun part of, being a market junkie, is people come up with these things. But basically, hard assets, low something. I don't know what the O stands for. Somebody might tell me in the chat. But basically, I've just been hearing this acronym getting thrown around. It's the idea that right now, the stocks that are winning, the stocks that are working, the parts of the market that are working are physical stuff. Almost, for people who are not necessarily stock market people, think commodities too, right? You have this environment where we have high growth on a total output scale from a lot of economies. We have elevated inflation, not terribly high. We'll see, of course, more tomorrow about that with CPI. But a lot of the physical world stuff is performing well because people feel right now the narrative is so scared about AI is going to destroy XYZ digital businesses. And it is a ground shaking environment. For so long, Chris, it felt like, you wanted to generate alpha, you bought software stocks. That was almost like the too easy idea over the last 5-10 years. If you bought good software companies on sale, you did really, really well. And now maybe the game is changing from underneath our feet. You have energy stocks. Here's comm services, right? So there's an example of kind of a under scrutiny, disputed area. But here's consumer staples, right? A halo stock or halo part of the market for sure. Think Costco, Walmart, companies that people, everyday needs that people have. They're simple businesses. Consumer staples, this is a year-to-date chart. They're on fire here, where they've been a pretty much dead and sleepy part of the market for a long time. Boom, all of a sudden you got to move higher. Financials are a little bit lower here year to date. Utilities are higher, right? Need that power grid. Consumer discretionary, again, kind of mixed here. People a little concerned about the consumer, a little mixed bag there. Real estate's moving higher. I think that's a little bit of that is a real world stock, right? Real world physical assets. Here's regional banks higher here a little bit as well. Here's IGV, right? Perhaps the biggest loser of the year so far is, for the last 5 years, like the biggest winner area of the market is to be in long software names, other than semiconductors, of course. Here's XLI, right? Easiest play in the book, at least right now. Man, I would love to be buying dips on industrial sector stuff, because again, if we're going to build all this AI stuff, if we're just following with what's happening in the world right now, okay, AI is disrupting. Okay, who's going to win in that? Well, you got to build AI. There's a lot of physical, real world stuff you got to do. So physical stocks, it's a theme here. Here's tech stocks, flat year to date. Healthcare stocks have their own troubles, but flat year to date. Basic materials, right? It is by far and away a rotation that I don't necessarily think, Chris, is just, hey, the economy has broadened out and that's great. I think it's a narrative shift that is causing this rotation.
Yeah, I think it just speaks to the insatiable demand for this like AI optimism, which is great. But I feel like it also is exploiting how bad our infrastructure is to make this happen. So all this is, we essentially have a blank check to make this happen. Do it. We're gonna, we're gonna take over Venezuela. We're gonna do deals with everybody in the world that we can get a better hold on rare earth minerals or hard assets, commodities, whatever it is. Inflation is probably the only thing that really takes away the keys to this plan. I think maybe you'd agree with me. I think that if anything were to happen in the currency market, as long as we can keep some, like the US and Japan will both do whatever it takes to fix the bond market. Currencies be damned. Like we might see the Japanese yen get crazy strong or crazy weak, but I think the Japan economy wants to fix its bond market, keep its bond market resilient. Same thing with us. That was the flinch in 2025. Like our, trade war liberation day stuff was a flinch in the bond market. I don't think we really are trying to have a manipulated dollar. I think we have to just keep the bond market flows. This whole idea of going to stable coins, it's a way to kind of synthetically get bond market flows of treasury purchases. I don't know if it's going to be the world wants to do it or if it's going to be countries that, have smaller economies. But XLE is insane. You mentioned staples as well. It's like, there's pretty easy ways to look at markets every quarter, every half a year, and just do a pretty simple rotation. Whatever is the most beat up sector, put more money into that. Whatever is a high flying sector, scale it back down to what a sample allocation is. I think there's 11 sectors, so you can just do roughly, like if you had a 100K account, you do 9,000 in each one, and if one is up, to $12,000-$13,000, scale it back, take your profits, and you just balance them out. And in the long run, that's a really easy way just to play sectors and have not all your eggs in one basket, so to speak. But obviously that is a safer way to play it. It's lower volatility, but you're going to underperform when it comes to tech leading the way at 30%, and then energy sector rip at 20-30%. If you did this every quarter, typically the momentum in the market is, if it leads the first half of the year, it's probably going to stay that second half of the year. Like what kind of gets out of the gates and runs hot is most likely going to be where all the momentum and flows are going.
Because it can take some time, right, Chris? I mean, in terms of the rotation, I mean, we saw consumer staples just be a dog for so long, and now all of a sudden it's a superhero. So it can
Right.
really take some time. But to your point, you eventually, we've talked about this. It never sort of like on a dime materializes, maybe as much as it is right now. But like typically when you see these very stretched valuations, these high expectations, I mean, software for a long time has been a crowded trade. People love software names. They have high, earnings growth potential. But then all of a sudden it's like the narrative shift, boom, and they can get re-rated real quick. And so it is a bizarre time to say the least. Real quick, I just wanted to do this. We do it every time we're together on Thursdays. Little quick look at just market sentiment here, just feeling things out. We have the investor sentiment survey showing a rise in bearishness here recently. So first time in a while that we've actually got bears and bulls just about even. We've got 38.5% of people responding that they think the stock market is bullish in the next 6 months, and 38.1% saying they feel bearish in the coming 6 months. If we scroll down, we can also just see how this timeline has played out over time. You could see bullish sentiment has been on a very slow decline here in recent times, with a little bit of a poke up in bearish sentiment. I can't say that I'm surprised given the new narrative here that it's kind of hitting the wire. You have people saying sell software, all this stuff. And by the way, I just want to reiterate, I know I've kind of outlined that narrative, but it is not necessarily the narrative that I am fully subscribed to. In fact, I think there's a lot of software companies out there that are getting waxed way too hard, and there's some great companies. I'll throw one out there that I've said I'm watching to potentially buy. I think Intuit with TurboTax and all this stuff, I think that it's getting nailed, where I don't necessarily think that that is a theme to stick to. By the way, just real quick plug, the Edge Finder is free to play around with this week. It's public access. If you don't have a copy, that free week extends through the weekend. We're going to extend that until Sunday night. So if you want to try out the Edge Finder, it is 100% free to do. We'll drop a link here in the chat to where you can request a copy, and it will send it directly to your email. No credit card required, nothing like that. Just try it out. And all I ask from our team is that you give us a little bit of feedback on how we can continue to improve the product for users. But yeah, Chris, I mean, where are you on with that? Like, I know obviously the narrative shift, you're talking about, if we're being a little bit contrarian here, believe it or not, the contrarian perspective is to not freak out about software, I think.
Yeah, I mean, I think software is being overcooked. I mean, it's the deleveraging that 2022 ended up catching up to be like essentially everything was down. Energy was up the first 3-4 months, and that rolled over. Everything was down pretty much all of 2022 in October. It feels like that's why IGV and software stocks are getting hit. Like, it's like, oh my gosh, these stocks are down 40, 50, 60+%. It's not a good sign. It's certainly, it's a little early to say like, I like it, because
Right.
I mean, as well as I do, a 50% drawdown could become 60 or 70 or 80. It doesn't feel good to throw money at something and watch it drop another 20, 30% when you're like,
Yeah.
well, it could be great upside potential, or it could also be dead capital for the next several years.
Yes.
And I don't know. I just think that's not something I'm really wanting to like throw in on. I think as a basket, like IGV could be good if there's, those that come back can kind of save IGV, but it's going to be a tough environment to be a stock picker, because if the market as a whole just hates software, and I do think it's overdone. I mean, even NVIDIA's CEO said that these software companies are going to be made better with AI. So I mean, they're trying to kind of finesse the narrative a little bit. But look, right now, all I'm staring at is indecision for almost 2 to 3 months. So my next real, positioning is like, can the market prove that we've got what it takes to get over the 7,000 handle with some momentum? And if so, measure the move up to about 7,200. You can see like a little bit. Let me actually draw this with some straight lines. If I did a slight, little bit of a broadening pattern type look, it's pretty minor, but something like that would kind of keep prices very dicey here for the next maybe couple of weeks. It's like, can non-farm payroll on Wednesday, CPI on Friday, into the month. We've got most of our earnings, the big earnings especially, I mean, this is another big earnings week, but I mean, Mag 7 reported the only thing that's at the end of the month is going to be NVIDIA. So, I mean, are we going to sit and wait for another couple of weeks until NVIDIA has earnings? Is it amazing? Is it lackluster? NVIDIA is a classic buyers and sellers both lose because it usually is just very volatile and we don't see a lot of big direction on it. But I mean, I don't enjoy trading this environment where this is just back and forth. There's no real reason to like get overcommitted to anything, right?
Right.
So anyway, so I'm watching that stuff to see where the next big leg is. Just be mindful that on the downside, we've had some, spikes up in the VIX up to 23, back down to 17, multiple times here to start off the year. So poking above 7,000, maybe the VIX drops to sub 16, breaking back below 67.50. We might see the VIX up to 25 again. But like I said, downside wise, it's easier for prices to flush to like 65.50 or so. Versus trying to rip up to 7,500. So
Right.
I just kind of want to wait and see like what does this market actually want to do from a directional standpoint, from confirmation. And until then, I'm just kind of grinding my little face off, zero DT stuff, and being patient. And I know that's not fun for a lot of people, but that's certainly what I'm trying to be, and that's what I'm pretty committed to for at least now until I'm more confident.
Yeah, Chris, I want to show you something on Stockbox I've been playing around with. You might find this cool. So we're adding this little calendar here in the top right for earnings related stuff. And what's kind of fun about this is that we don't have a lot of data historically, because what this will do is as data points for earnings releases will roll forward, it will start tracking the one day average move, etc. The goal with time, as this thing learns through watching more releases, like for example, I pulled up NVIDIA, the goal will be that you can see the upcoming release and the one day average move like 24 hours later, which I'm really excited for, because I know from an options standpoint, the implied move is one thing, but then the actual move is kind of what's going to be showing here. So just kind of fun, but we're playing around with that. We've also been playing around with our own AI stuff that will help pull open like kind of the major headlines on a particular name that you select. But just wanted to show this because I'm having a lot of fun working on Stockbox, and it is a grind, but it's coming together. Stocks, obviously we've done Edge Finder for years, been building this thing for years. Stockbox we've been working on for about 1.5 2 years, but it's a whole nother beast because you're talking a lot more stocks, a lot more data than sort of your headline economic figures for a select number of economies. But coming together and kind of fun. Also, my hood earnings play did okay. I did okay with it. I ended up selling out of the call side, or not selling out, buying back the call side. Took a nice profit on that. I think 72% of max profit.
Nice.
And I've still got my my short put position on that. I'm okay with assignment if it happens. But if we get a bounce, I'll probably close that out for a profit as well.
Yeah, that's not bad. Actually, it was I think it was within the expected move when I looked at it from the earnings print. So it's just interesting to see Hood go down, Webull go down, while Schwab, Interactive Brokers, CME, CBOE, anything like trader related, retail related, those are doing better. And I can't necessarily pinpoint why is it that Hood would be going down, other than maybe some crypto, maybe some leverage, maybe some, they've been, hit with the order flow. They get paid an order flow to Citadel. That was a big, GameStop drama with Robinhood, and they needed that bailout. But I don't know. I don't think everyone's necessarily like leveraged to the teeth. It's like no more than anyone else in any other standard broker. So I don't know. It's I think Robinhood still is great as far as their users are growing. I'm sure that's something that every broker's probably striving for, but I do think that they still need to improve their platform. They still need to improve their trade permissions. They still need to allow traders to trade more than just, simple buy calls, buy puts. I mean, you can do a spread. I know you can build some trades, but I mean, I say that because I'm taking, 2, 3, 4 leg trades all the time. Yeah. And for my platform in Tasty, it's very easy to execute, and it's not in Robinhood. You have to build essentially. If I want to do a 4 leg trade in Tasty, I build it as a 4 leg trade and take it. If you want to build in Robinhood, you have to do 2 legs and 2 legs, and then track the differences, make sure the math works out. And if you're doing zero DT, that's a lot of extra work, and you're going to get some price differences for sure. But anyway, I don't know why they're down 40%. I think that, I mean, I think valuation wise, let's go simply Wall Street. Valuation wise, I think their discounted cash flow model gets them at like $45 fair market value. So I'm looking at some puts down there. Coinbase, I had a thought to take the trade But I'm looking at like, Coinbase lows are like $33. I mean, Bitcoin does not look enticing at all. I think 60,000 is going to take a moment to kind of flush out, maybe try to find like a saucer bottom. But here's hood. See what it's looking like from a snowflake perspective. I mean, it doesn't have a ton of risk. Price to earnings. Oops, they take it away. Oh, I had this account. I'm just not logged into this laptop. Anyway, let's go to the chart. So let's look at Robinhood compared to Coinbase. So Hood, $78. I'll be cheering on your 75 sell put for that part of the strangle. I was looking way back here here is a high at 67. Then we have the Liberation Day lows at 30. That's a big difference.
Mm-hmm.
I mean, from 70 down to essentially this thing got cut in half during Liberation Day, and then it just ripped after that. Maybe just some
cut in half again.
I don't know, from like correction perspectives, or this is a kind of draw this out here. If it was one big swing, A, B, C, D, this isn't a bad spot to start seeing this price go back into that maybe 100 level. That's kind of my harmonic merge. So if we kind of bottom out here, I think that's a pretty good spot there, Nick.
Yeah, we'll keep an eye on it. It should be an interesting one to watch. And again, to your point, Bitcoin itself really struggling to get anything going here. And I pulled up a chart yesterday. Got a little bit of attention on my video yesterday. I wanted to share with you here. We'll make it our quote unquote chart of the day. I mean, look at this and tell me that these two things are not in some way connected. This is what you can see here. I'll make it a little easier to see on the screen for everybody. Let's go with a yellow just so it's real bright. Okay, so what you have in yellow is the Japanese 10-year yield. And what you have in the candles is obviously Bitcoin. Notice how, like perfect synergy, the inversion of these two charts, or I should say the divergence of these charts happened right there when the Nikkei, or I'm sorry, the Japanese 10-year started plummeting and yields started skyrocketing. At the same time, you had probably the onset of a deleveraging event. And I don't see, I mean, everybody kind of flared up and talked about it for like a week or two about what was going on with the 10-year yield in Japan. But I genuinely think it is a persistent, consistent, and problematic force for Bitcoin right now. This is, as we've talked about it, we've coined it on this show, a global rate hike type of feel. That is not what Bitcoin wants to hear. Bitcoin in 2022, during the Fed raising interest rates, had a horrible drawdown because of the Fed raising rates. It is very sensitive to the cost to borrow money. And so, I think that if you're somebody who wants to be bullish Bitcoin, I know everybody, adoption this and, historical patterns that, but like, look at how clear this selling is in combination with the selling of Japanese bonds or the rise in 10-year yield in Japan. I think that if you're bullish on crypto, you want to see this relax. And at some point it will. I just don't know where, right? Once that yield starts to relax, there's a good chance you get a solid bounce in crypto. I just don't know where that is.
Yeah, I think that bounce too is going to probably come with excessive money printing. I mean, that's probably the big pivot, is like, we're going to realize, and this is kind of the paradigm, paradigm C, which is, all signs point to growth, and we're going to grow our way out of this debt. We're going to service our debt. Bottom line is, if yields don't budge, servicing debt after, all the COVID loans in 2020 are due. Like 2025, 2026 onwards, like refinancing, borrowing new money, it's way more expensive to service. The Fed right now, like, they're getting like a 3.3%. Like, they're servicing debt at 3.3%, which you can't find that anywhere. Mm-hmm. So I just feel like when it comes to that, like, debt refinancing bubble, that there's $40 trillion globally that need to kind of be refied in the next 1 to 3 years, like from 2025 to 2028. It's like $40 trillion looking to find new servicing. I think if we have to kind of print our way through that, or stimulate our way through that, that might be the drop in yields. That might be the safe haven in bonds. That might be hey, we've got excessive money printing again, more circulation again. Then you have just the overall rise in assets. Ultimately, money printing's going to devalue the dollar, but probably be good for assets overall. The stock market still finds a way to grind higher. The Nikkei still is a great trade. EWJ has been treating me very well, and I'm not bailing on these positions. I have nothing in here except for, I'll trail the stop eventually, but this thing, after a 30-year drawdown, we are off to the races, and I'm going to let this thing just go. I don't know how much higher it can go, but I'm not going to stop it either. If we're just getting started on some wave structure, this is still like finishing a wave 3. I think this is a pullback wave 4, and wave 5 could be in the 115 to 120 zone, which I own this thing at $66.
I like it. That's been an excellent call on the EWJ side of things, Chris, because it's one of those things, and we got to go here in just a second, pass the show on to the next. One thing just to leave off on the Nikkei specifically is this new regime. It's not going away in Japan, right? So you have this persistent, whether you like or dislike the theory around let's grow out of our debt. It's an attempt that is going to be made both in the West, across the West, right? Japan and the US are turn on that money printer. Let's stoke the economy, win the AI race, or bust, right? It is one or the other. And so that's the theory. Don't lose to China. We can't stop. Now we'll lose to China. That's the theory. It is a space race for the modern era, except it's the AI race. And so Japan is in on it. US they're going all in on this play, print money. And so who's going to win in that, or who is an obvious short-term winner? Well, it's not bond investors, it's equity investors, right? Because that money is just going to get pumped into those markets. So I'm a buyer of dips until further notice. I do see concerns with that whole story about the debt stuff, but it's a tough one to try and time anything around. And at the end of the day, that money pumping into those companies, corporations, they're going to benefit from it. It's not a bad thing that those companies are going to have, a rock star, fertile crescent environment to work with in the meantime. Anyways, good stuff.
If you're worried about the debt stuff, buy gold. If you're worried about the debt stuff, buy gold. Assets are still going to go higher. They're designed to go higher. They are designed to go higher. So gold is a safe haven. If you're worried about stuff, then be smart about your leveraging. Don't leverage. Just buy good levels on gold. Allocate properly. Think about that all-weather portfolio. You can do some research on it. Ray Dalio has been made famous from it. That way, if something breaks, you're not overexposed on anything. You can find ways to survive. And obviously, there's opportunities all over the place. When something breaks, that obviously presents a lot of good opportunities. Most people look at it as like, this is broken. But a broken chart like IGV, at some point in time, IGV could be one of the greatest comeback stories that we have. So I'm just saying, I don't want to be caught over-leveraged, overexposed when you really just want to have the dry powder to buy what's going to be really good upside.
Love it. Good stuff, Chris. Thanks for making it on today. Appreciate you making the show happen. And good luck with the little one.
Thanks, man. See you tomorrow.
See you, man. All right, guys. Up next, we've got Miko Audu taking over the stream. Of course, just a little bit of a heads up. Miko is a technical trader. He's been coming on the show for a while. The man knows his charts real well. He covers a wide range of stuff. We've got Forex pairs coming your way. We've got indices, etc. So don't go anywhere. Miko will be coming up after this quick break. Real quick thing before I do that. If you guys aren't trying out the Edge Finder, it's free to try this week until the end of this week. We'll drop a link here in the live stream chat to where you can request your copy. Again, it is totally free. No credit card, nothing like that. Just fill out the form and it will send a copy to your email so that you can start playing around with our tools totally free. With that said, here comes Miko Audu. Stay tuned. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Okay, what's up, people? Hope everyone is doing good. Glad to be back on the channel. As always, I'll cover a wide range of markets, FX, indices, crypto. If you have any recommendations, any markets you're looking to trade, want my opinion on, of course, someone else's, drop it in the chat. I'll be happy to discuss. Now, at the moment, I don't really see much going on, particularly in the FX world. I'm not a big fan of the price action, so I'm being very, very conservative with finding opportunities this week, especially with the USD pairs. I'm not a big fan of the price action we're seeing on the dollar. Altogether, very flat, and of course we have been flat for some time. And I mean, we are testing some critical areas, which I am interested to see how we behave. But in terms of actually finding some opportunities and my type of styles, I'm looking for swings in the favor of trend, in the favor of momentum. Not necessarily trying to pick bottoms or pick tops, but where the market is showing strength, that's the swings. Those are the directions I want to be looking to play. And with the dollar right now, of course, we're kind of flat. So buyers, sellers, fairly equal. We have been since kind of roughly mid 2025. Now we're back testing some support. Potentially price might break through. Maybe we do respect it. I'll find out hopefully in the next week or two. So looking at the DXY, of course, I'm not really looking to trade the DXY, but I can get a feel for what USD might do next. And because it is quite 50-50 in my eyes, I don't really have much of an edge in terms of direction. So when I do look at other USD markets, Euro USD, I'm seeing the exact same pattern essentially, but of course at a slight angle. We've got an ascending channel here, equal highs roughly, equal lows roughly as well, of course in an ascending manner. And now price is kind of just trading in the middle, all of this. This is really where I would classify neutral territory. Buyers and sellers are quite equal here. Guessing which way price will go next, I think, is a bit more of a guess. At least if price is close to these extremes, we have a bit of an edge case. Price is going to break out. Well, if we see some signs of rejection, we know likely we're probably not going to break out. And of course, if we're seeing strong candle closures above, I know there's a good chance we could be seeing a breakout. So there's more edge in those areas. In the middle is kind of where I would stay careful. Maybe keep it very short-term intraday. There might be some short-term plays. But from a swing perspective, not the place I want to be placing entries. I know it looks like price has come back to retest some structure, but in the grand scheme of things, we're very neutral. Pound USD likewise as well. This one actually represents a really, really clear range, similar to the DXY. Equal highs roughly around 1.375, equal lows 1.316. And again, price fairly just back and forth, not really progressing much. So in these type of situations, you got one or two things. If you're looking for swing opportunities, you're either waiting for breakouts or rejections at the extremes, so the high and low of the range, or you probably drop into the lower time frames. You're looking for very short-term moves, not necessarily to take advantage of direction or momentum. It's just intraday fluctuation, which you're betting on, and you want to be fairly quick to exit those positions. Not really my type of style, but I can see some logic within that. Anything else, I'm most likely just trading noise, forcing trades out of boredom. And that's really what I'm seeing across the board for the USD pairs. And the USD, yeah, there's some momentum with this one, but we have an obstacle right above our heads. Do I want to be buying into that? No. Do I want to be selling? No, not yet. Maybe, but there's no evidence to support that. One USD pair I do like, dollar CHF. Reason being, higher time frames still look very, very bearish. Momentum still picking up. Long term, I still do think price is on its way to all-time lows, back at 0.706 roughly. And again, if you look at the history of price, we've just been falling since the beginning of time pretty much. So dollar CHF, I'm expecting more downside. Now, the only thing is, this is a monthly chart. It could take a while, and we don't necessarily have to complete this swiftly. Price could consolidate, it could push back up. It could be a whole another few years before price gets there. So as long as momentum stays ripe and we're seeing force to the downside, I'm actively going to be looking to sell dollar CHF. But if we do push up and start to stall, we could consolidate for a while, and that could take some time. So I'm not expecting necessarily price to get there soon. It's just that's the likely target long term. So if I see good healthy selling opportunities, momentum's there, I'm very much happy to take some shorts. And my plan this week actually was looking for a retest of 0.782. Unfortunately, no retest of that area as of yet. Maybe price does give us suddenly a bigger pullback. I'll keep an eye on that. Where I do see opportunity though is US30. I really like the price action, really aggressive candle on Friday, cleared a level which we were respecting for past 2, 3, 4 weeks, consistent rejection. Then Friday's candle eventually said, okay, let's break through that. Trend's still relatively healthy. We're kind of grinding higher, so there's no kind of unique situation here. This is kind of textbook US30 uptrend bull cycle sort of price action, so it's fairly clean. And of course, we left behind a very nice level for a retest. So I'm just looking to see if we can get a retest of this zone. Numerous tests. I'll be very happy to place entries and stops below. And I'm just betting on the continuation of the trend. And I'll stay bullish for US30 as long as we don't break through this low here. 48,600. As long as we can maintain that structure, I'll stay bullish. If we break through, I wouldn't be bearish, but I would be more cautious with that bullish bias. We might be seeing a deeper correction. So yeah, I don't really have many pairs at the moment which I'm focused on, many markets I'm focused on. I like US30 because it's clean. NASDAQ I don't think is as clean right now. I've been trading this one a lot, but it's practically a range now as well. And then the S&P is pretty bullish recently, but we're just pushing right back into highs, so don't see much opportunity there. Anywho, we can go through some requests. I'm seeing Euro yen, pound yen, a lot of yen pairs mentioned. New Zealand CAD, okay, we'll go through some yen pairs, and we can take a look at New Zealand CAD as well. So yen pairs are interesting. They're interesting because we're in a situation where we could be seeing at least a pause in the trend. I don't want to say a top because they've been bullish for a few years now, and there's been multiple times where price looks like it's about to turn around, but it just keeps going. And I'm going to be very, very sensible and make sure I stick with the higher time frame trend until the higher time frames prove otherwise. And at the moment, we are seeing a pretty bearish candle there on pound yen. I'll get through some other yen pairs shortly. So what does this mean? Well, it means we might be seeing a bit of a retracement. And that's about it. I mean, the market's been super bullish. We've taken out some significant highs. Naturally seeing a bit of a correction, I do think is pretty healthy. Does this mean we could see a drop like this? Maybe, but I wouldn't necessarily bank on that. What I'll be looking for is some downside maybe for a few weeks before I'm expecting price to rip back to highs and continue pushing. Until I see some real hardcore evidence on the high time frames that suggest, okay, maybe this is a top. Yeah, I'm expecting the yen pairs to find support eventually and push back up. But what that does mean is that on the lower time frame, you can maybe find some short-term sells. And I quite like pound yen. Out of all the yen pairs, pound yen would be my favorite. Reason being, we're seeing numerous signs of failure to create new highs. We had the original high over here. Price came to test it again, failed. Price came to test it again a third time. It did slightly break through and create some new highs there, but essentially recovered that area, failed, and we had a really aggressive move down. So what did that tell me? Well, we're trying to continue. We're getting to the same level, but we're just not seeing the energy, the buying pressure to actually break through. So price will likely push lower to go in and find the buys needed to eventually continue that uptrend. So I'm expecting lower prices purely out of retracement. Now we have seen some low prices already, and price has taken out some lows, and we're testing some areas here. This could potentially be enough to send us back up again. So I want to see pound yen correctively push up. I don't want to see a move like this that indicates strength, that indicates strength, because essentially, again, I don't want to be shorting a market that's bullish. I want to be shorting a market that is very tidily bullish and likely to retrace. And the only way I can tell is just reacting to what prices give me. If this area suddenly gives us a very strong reaction to the upside, I want to be very cautious. If this area sees a very weak reaction, well, that implies that we might not be seeing enough buying pressure to actually continue the trend. We could probably roll over and maybe see a deeper correction. Now that would be a selling opportunity I would be interested in. So still being very cautious, still understand higher time frames are still bullish. Again, across the board, euro yen, same situation as well. Price action, almost a copy and paste of pound yen. But you can see price just been making slight higher highs and having really aggressive bearish moves. And this occasion, we failed to make a higher high, and again, a very aggressive move. So the trend is tied. I do think low prices are likely. It's just I would be very cautious about how to trade it. I think a big mistake a lot of traders do make, especially in the FX market as well, actually, in a lot of markets, is when you do have a trend and you start to see the trend tire, you automatically think, okay, this is a top, let's start shorting, when most likely it's just price taking a breather. It depends on the situation, depends on the trend, especially a trend that's been going on for quite some time. You don't want to be too premature to guess the reversal. So if you are going to short a market that has been bullish for a while, always have a conservative approach to it. Understand that, okay, if I take a short, I'm very much prepared to get out of this quickly if I'm proven wrong quickly. Even if it doesn't really go anywhere, it could be a sign to get out of the trade as well, because as a whole, the buyers are still in control, even with the signs that we're fading at highs here too. So like I said, same thing for Euro Yen as well. If we see corrective moves higher, that means, okay, we probably don't have the strength to keep going. Sort of similar to what we had here. Very correct to move up and eventually gave us a push down. I want to see something similar or even more corrective to imply that, okay, buyers are not quite here yet. We could probably see more downside. If I'm seeing strength like this, that's a red flag. And especially in the context of a long-term bull trend. So if you're looking at the yen pairs, I do think there's some room to the downside. Just let's see how we retrace, because that could change very, very quickly. And if we have a quick look at the yen basket, of course, the yen basket has been falling out the sky. There it is. It's been falling out the sky for quite some time. And if I expand to the weekly chart, of course, we made some significant lows as well. So we're in an area where, you know, seeing some upside is not what's the word I'm looking for? It's not surprising. You know, prices made some new lows. We're likely to see a retracement at some point. We could still keep falling, but I would say it would make sense to see some upside here. And of course, that could bring some downside for Euro Yen, Pound Yen, Aussie Yen, you name it. So yeah, yen pairs definitely one to watch. Keep an eye. We can take a look at New Zealand CAD next. Of course, any other requests, drop it in the chat. I can quickly run through Pound USD intraday as well. NZD CAD, not a market I've been keeping too much of a close eye on recently. Very explosive move we've had over the past few weeks. You know, we were very, very slow, and then suddenly price had that expansive move. So what would be the play here? Well, the main thing you've got as your advantage right now is that there's a lot of bullish momentum. So if I was going to take a trade, it will be based around that. I wouldn't be looking to try and fade this bullish move because I have no idea where the top's going to be. This is very, very messy price action. Very, very messy. I wouldn't try and predict any type of top or anything. And also, I wouldn't get carried away with the bullish momentum either, because it is a very choppy market. Therefore, I don't expect momentum to last too long. But what I can probably expect is maybe a small intraday move back to highs. And that's about it. So if you look at the trade New Zealand CAD, the only move I see with good probability would be like a short-term buy back into resistance. You're taking advantage of momentum in the higher time frames. Structure still pointing up, support still being held. Buys effectively do make sense based on structure, based on momentum. Anything more than this is kind of just, I wouldn't expect anything more than that. If there is more, great. You can trail stops, you know, hang on to a position, see how far you can take it. But I wouldn't bet on more than that. And yeah, very, very messy market. I'm not a big fan. But like I said, if I was going to trade it, what can I take advantage of? It would have to be the bullish momentum, but in a short capacity. I wouldn't try and stay in that trade for too long. Very, very messy chart. In terms of Pound USD, again, like I said, I'm not a big fan of the USD pairs right now, just because of the conditions. We're ranging. Direction's not quite clear. What I would like to see is if price does make a move up and rejects the high of the range. That's information I can use, because this is an extreme. You know, price has been here twice or three times if you count this high since mid 2025. We've struggled to push past this area. If I see some more evidence that price is struggling to again push past that area, well, I can look for some shorting opportunities based on the fact that I don't expect price to break out. And of course, if you do break out, that's a different situation. But where we're trading right now, again, I don't see much opportunity. purely from a swing bias. If I was to drop to like a 15-minute chart, I could probably invent something, but again, that's not really my type of style. And yeah, I'm not a big fan of the hourly chart either. This looks really, really messy. Yeah, I don't see much from pound, to be honest. I'll be forcing something, and that's never a good idea, is it? So yeah, pound USD, I do like the range to see what we can do at the high. If we can get there again and reject it, that could be something, or of course even break through. But pound USD, just we're not really trading at an area of value. Momentum's not quite there. We're a bit flat. That's the worst conditions really to be getting involved in, personally. So I'll be careful with pound. New Zealand dollar, now that's a bit more interesting. NZD is still quite strong. We just had a look at New Zealand CAD. Like I said, what's the main thing to take advantage of in the price action of New Zealand CAD? It's the momentum. New Zealand dollar, absolutely the same thing. We've got massive resistance above our heads. There's a good chance price is probably coming back to retest that area. Whether we break through or not, we'll find that out later on. But again, short-term trade back to highs, that's a bet that makes sense to me. Again, hourly chart quite choppy. I would be careful about trying to pick some highs here. What would interest me is if price was to push back down into lows, reject this area. I can find entries here, put stops in a relatively safe place, and then still take advantage of a push back to the high, and risk reward makes sense. Trying to pick some buys here. Yeah, I don't think that's completely optimal. Maybe price just breaks out and runs higher, but I'll let price do that. I always want to be buying where there's evidence of other buys being there too. Here's purely evidence of sellers. So yeah, momentum looks good. I would wait for price to pull back. Buying now feels a little bit uncomfortable to me unless you want to have a big stop loss, but that would just sabotage your risk to reward. Again, we may not see this move, but if it was to happen and we reject support, well, I think that's a very smart place for an entry and a stop below. And you're looking at a pretty decent risk reward back to resistance based on a move that makes sense in the higher time frame. And whenever you're doing business on the lower time frames, absolutely you want it to make sense in the higher time frames too. So yeah, New Zealand dollar, some upside looks good there. But again, short term, I wouldn't be predicting anything like this. And a big move there. Dollar CAD, yeah, dollar CAD is another one which is at support. We are showing signs of rejection. I wouldn't be trying to predict anything just yet. Naturally, I would be looking for some buys because I'm not seeing evidence of a breakout yet. So my bias would be bullish for dollar CAD, and I would be looking for some upside, but I would say it's a bit early to be jumping into some longs. I quite like the longs actually because we're very, very consistent at respecting these higher lows. And I think there's a good chance we do at least see a bounce. I'm not necessarily predicting this, but I do think we can maybe see a week or two of upside. So based on where we're trading, I think dollar CAD's a good place for a long. From a swing perspective, it's just I would wait for that to kind of develop. Let me look at the 4-hour chart. Yeah, I wouldn't jump into some longs yet unless you want to have like a stop loss underneath here. Then I would say you can look for entries because you're giving yourself enough wiggle room, your stop loss in a safe place. What you're basically betting on is that this level will hold, and if price does trade down here, well, we'll probably see a breakout at that point, or maybe a massive fake out. But then of course you can always re-enter if that's the case. So unless you're willing to have quite a large stop loss there, there could be an opportunity to get involved and basically bet on support holding. Otherwise, you could wait for price to break some structure here and look for the next pullback after. That way you're kind of trading this kind of swing here rather than essentially the double bottom. Both trades make sense. One's a little bit more riskier, one's a bit later to the party. You probably have a worse entry, but again, trading's all about trade-offs. So yeah, dollar CAD, I actually don't mind it. Something could develop here. I like where we're positioned. I'll keep an eye on the DXY because DXY is also trading at a lower range as well. So effectively, I do want to see the DXY make that move too, and that would definitely help out that dollar CAD trade idea. But based on where we're trading, based on high time frames, I think it's a smart area. Okay, we can take a look at the NASDAQ, and I'll go through gold as well. I think that was mentioned earlier. The yen, we did go through some yen pairs. I could take a look at dollar yen as well. First, I'll go through gold. So gold's interesting. Again, I always want to make sure I'm keeping up to date with I say up to date. I'm keeping an eye on the higher time frames. Up to date, they update every monthly, so there's not a lot of checking to do, at least continuous checking anyway. But we're still looking at a very, very bullish market here. So let's not get too carried away with the momentum we've seen over the past couple of weeks. We've seen some really aggressive bearish momentum, but I'm looking at the monthly chart here, and this looks like a very, very bullish market. So in terms of trend, in terms of momentum, I still want to be a buyer of gold as a trader. Not necessarily I'm talking about investing, I'm just looking at the market as a trader. I would like to be buying dips from this one. Now, when I do jump to the 4-hour chart, I do run into an issue because price right now is at resistance, and at the moment it's failing to break through as well. So before I do look to try and buy gold, I would want to see price showing clear evidence of breaking the highs and momentum picking up. And then I don't mind trying to predict that next high or low. We've seen one over there, we've seen a second. That third one is the one I want to try and catch. And then at that point, a push back to highs, and then maybe a push back to the all-time highs as well. That becomes a sensible move. So higher time frame still very bullish. I want the lower time frames to support that. At the moment, not quite, just because we're really struggling at the high. And for all I know, maybe we do something like this, which will definitely put a span in the works. If that was to happen, I would step back from actively looking to buy the market just yet. But yeah, if we can break the highs, that will give me some confidence that, okay, momentum's picking up now, so I can look for entries now rather than just placing an educated guess. So yeah, gold bullish, just lacking some confirmation. I'll go through NASDAQ next. So yeah, NASDAQ I've been looking at quite a lot recently. Most of my trades this year actually have just been on the NASDAQ looking for some buys. Since last week we had the break of structure, I have been pausing that bias because that's not what I wanted to see. What I liked about NASDAQ is that we were maintaining these higher lows here. And then I was betting that price was eventually going to break the high, but we rejected the high, and then we actually broke through that low. So once that happened, I did fold my arms for NASDAQ this week, and we have seen a bit of a recovery. I mean, price still above this low, but NASDAQ is not necessarily in this kind of bullish cycle, are we? We're in a different cycle right now. We're flat, not really trending. It's a situation where I don't want to be an aggressive buyer. Aggressive buyer here, sure. Here, not so much. So because conditions have changed, it means I want to be buying at the lowest possible place I can position myself, which would be in and around this area. That is awful drawing. Let's do that again. So in and around this area is where I do see value for NASDAQ. Not necessarily that I'm betting on huge continuation. It's just that if I can see rejection here, I would say there's a good chance we see a bounce which I can profit on. Trying to find some opportunities here just looks really messy. It looks like you're trying to force some trades there, I can't lie. Unless, again, you're very intraday, you want to be in and out. But if you're looking to position yourself for a swing, I don't really see an effective place for a stop loss. You could argue maybe one here. I think that's just a very risky place. You could have one here, but I would say your entry and your stop loss is just unnecessarily quite big. So I want to get something that looks like this with an entry there, stop loss here, and even a push halfway. I can probably walk away for a 1 to 2 there. And if it goes all the way to the highs, that would be a very nice trade. So yeah, NASDAQ, not my favorite. US 30, as I mentioned earlier, I think the price action is a lot clearer. Momentum's there, trend's healthy, clear level where price is rejected. That to me looks like a great place for a trade, and I've got a clear invalidation point as well. If price was to break through that low, I'll step back. Maybe US 30 is not as bullish as I expected it to be. But yeah, I think the Dow Jones is a much better market to look into. But guys, we have run out of time. I do appreciate being able to share my analysis with you guys. If you have found it useful, feel free to check out my channel, more of the same. Appreciate Nick and the team for allowing me to be on here and share my analysis. Really do appreciate it. But guys, thank you so much for watching. I'll be back here again next week, so look forward to it. But anyway, guys, take care. Have a good one. See you in the next stream.
Attention A1 Trading Show fans. If you're looking to connect with other traders around the globe, consider joining our Discord community. Inside of the group, you'll be able to join our chat rooms, check out our educational material, our coaching webinars, and more. Within the group, our top traders share their trade alerts, which will send notifications to your phone or desktop whenever we take a trade. Our trade alerts come with entries, exits, and full analysis with every trade shared. This is not a blind copy signal service, but instead offers an educational way of looking over the shoulder of our experienced team. For fans of the show, we're offering major discounts for a limited time. To claim your discount now and join the group, click the link that's just been dropped in the live chat, which will connect you to one of our trained support reps here at A1 Trading. Again, click the link that's just been dropped or find the link in the description of this live stream and you'll be connected with someone right away. Now, back to the A1 Trading Show.
Hello. For some reason, there we go. The screen is on. How's everyone doing? Happy Thursday. Hope everyone's well. Hope you're all having a successful and profitable week. So, there's not that much going on in the markets today. Obviously, we had US news yesterday with the labor data or the jobs market data. It doesn't seem to have really affected the dollar at all, which is odd. No, well, maybe not odd. That's not the right word. However, what I mean by that is we've not really had any significant momentum since that news release. Now, keep in mind, the Fed was on hold due to elevated inflation. And of course, we were looking at a potential cut for around April period due to the weakening job market. Now, obviously, we've had higher NFP and unemployment has come down as well. So it might be a case now we see some pricing out of the rate cut expectations, or at least somewhat. But of course, we are seeing the dollar take a little bit of a dip here. So we'll see how it develops. I'm not really too bothered either way. I am in euro dollar. I showed this one to you guys yesterday. I scaled in actually yesterday as well. So this was actually initially mainly a technical play. It wasn't a trade, following my normal strategy, which is obviously very heavily macro based. This one, again, as I said, was more of a technical trade, just based on a fib pullback into previous structure, break and retest, took a long position, and then yesterday's bearish momentum on NFP, or just after NFP, provided a second entry opportunity right here. So I've added in again with obviously sort of recycling the initial risk from the first position because it's break even. So yeah, that's pretty much all that's going on that side. I'm looking for around 1.2. Obviously, we came to 1.2 previously. It's quite a major level psychologically, but we've also had the ECB speak out about 1.2 previously. So I'm just looking to see if we can get another retest of this level, and then I'll be cutting the trade and getting out and reallocating somewhere else. No interest in holding euro dollar for that much longer, to be honest with you. Still in silver, absolutely no development here on a price action view. It's just sideways. New Zealand Swiss, also still choppy. Again, I showed all of these yesterday, but there's nothing going on here. It's just a case of, profit, drawdown, profit. So it's really just need to see a breakout of this sideways range before I can build any sort of confidence or further confidence on the trade. Euro New Zealand, didn't take this one too long ago, actually. I think I took it earlier this week. So Euro New Zealand and New Zealand Swiss actually up here is getting a bullish reading. But Euro New Zealand's getting a nice bearish reading of -8, which is massively supportive for this trade. So yeah, that's really it. Other than euro pound, which again is kind of just sideways, not doing anything. The reason I'm happy to hold this is because the entry hasn't been invalidated yet. We're still on a 50% retracement, or still sort of above this 50% retracement that we saw. And it looks like we might be getting a bit of a trend change here on the H4. So yeah, there's some supportive technicals. Lastly, I'm on a Bitcoin short. This was really aggressive, not following my normal strategy of fib pullback, previous structure, anything like that. It was more just to see if I could capitalize on the momentum that we're seeing on higher timeframes. But it's very low risk, so I don't really care what happens with this one. If I get stopped out, fine, whatever. If it works out, again, fine. Don't really care. I've got no relationship with crypto or Bitcoin in any way, to be honest with you. So yeah, that's that. Sluggy, hello. I think bearish DXY still stands unless we get hot CPI tomorrow. Yes. Yeah, we can go with the dollar. So fundamentally, the dollar, I want to say fundamentally, I'm talking about the economic indicators. The dollar is actually still bullish. So if we take a look at the economic heat maps and look at the US here, we've seen, obviously, yesterday's data was very supportive. Unemployment rate ticked down to 4.3. Forecast was 4.4. NFP had a massive beat at 130K from the forecast of 66K. So short term, the edge finder is giving the US or the US dollar a bullish reading with a 64% positive score. Then if we take a longer term view using the economic strength index, the dollar is the only G7 currency with a bullish reading. So this is what I mean. Fundamentally, based on the economic indicators, the dollar is bullish. But as well as that, if we account for, as I said earlier with the Fed held rates due to sticky inflation or elevated inflation. So if we go ahead and have a look at inflation data, we're still above the 2% target. We've not done anything. This is pretty much a sticky inflation. We've got 2.7, 2.9, 3, 2.7, 2.7. It's not doing anything. We're not seeing rising inflation, cooling inflation. Nothing's happening. So based on inflation alone, the Fed's not in a position to cut rates, in my opinion. And then, of course, we add on yesterday's labor data. Still cannot cut rates. That doesn't mean they're not going to cut rates in the future. I think it just means, from my perspective, from the way I see this, the Fed is going to be on pause for maybe a little bit longer. But yeah, those cuts are still coming. And I think there is still a lot of worry about the dollar, or about the US, I should say, not necessarily from a data aspect, but more from a, what's the right way of saying this? I don't want to say political, because it's not really political. It's more of like a structural fear around the US at the moment. So yeah, yeah, it's tricky, because this is where it's hard to sort of explain or to teach. Maybe is that the right word? To try and teach this stuff, because all of the data that we typically would look at, as I showed you on the Edge Finder, is saying that we should be buying the dollar technically. Or at its core, maybe is the better way of saying that. But again, there are reasons to stay away from dollar longs right now, which is why, euro dollar longs. So yeah, I'm definitely not optimistic at the moment. However, I suppose on the other side, we can look at the sort of optimism, or the potentially optimistic side. Still on this level of support, on this trend line that's been established for like 12, 13 years at this point. And again, we've discussed this many times. Every time we've come down to this level, we've had a bullish cycle. So if we then take the idea that the dollar is the world reserve currency, the Fed might be on hold, or is likely to hold. We're seeing a little bit of improvement or resilience within the labor market. Inflation is still sticky, and we've got wash coming in. Maybe the dominoes are lining up for a bullish dollar. But again, I think it's just way too early to start saying that's a bit too presumptuous to be heavily long dollar right now. In my case, I am very slightly short with a small position on euro dollar, and that's it. Christian, hello, good to see you. So yeah, that's my view on the dollar right now. It's very mixed, very slightly bearish, but yeah, not really bothered either way. So let's move forwards. What do we have on the top setups today? Let's see. What can print us some money? So New Zealand CAD, Aussie yen, New Zealand yen. I would stay away from yen pairs at the moment. I think there's quite a lot of chop going on. When I say chop, I'm not talking price action chop. I mean portfolios getting chopped. I've seen quite a lot of people buying from this point, and I was a victim as well. I bought New Zealand yen. I think it was around here, a very small position again, but I was stopped out on that. So I think the thing is the yen is starting to show some strength, and the price action, not necessarily on dollar yen, but on things like New Zealand yen here, is looking technically like quite a good buy opportunity, but maybe it's not actually the best time to be a buyer or a seller of yen at this point in time. So I'll just take caution on yen pairs for now. Beyond that, I'm still very bullish on the Australian dollar, still quite bearish on the pound. So Euro Aussie is still looking like a great short position, but this waterfall is just not allowing any entries. There's been pretty much no reasonable pullbacks, or very few and far between. So we've had one here, and one here, and that's it. So we've had 3 potential entries. I didn't take any of those because I was at the time exposed to pound Aussie, but I'm waiting for a potential entry on the Euro Aussie if we can see another pullback, and a re-entry into pound Aussie as well if we see another pullback. And pound New Zealand, I think, could also be quite a nice position as well. Again, don't forget, we did get the dovish comments out of the Bank of England, which is supportive, obviously, for the pound bearishness. If we pair that with the central bank, in fact, even at the Fed at this point, the RBA and maybe the Fed, we could be looking at a bit of a central bank divergence. When I say that, I just want to clarify, I'm not going to go short pound dollar, but again, just talking about the central bank divergences. The Nikkei, I'm still looking to be a buyer of this at some point. It's really just a case of waiting for a pullback. I think we are due a little bit of a mean reversion towards these moving averages at some point. Again, it's just a case of waiting. There is nothing to do here just yet. So I'd like to see a correction of this left side, pullback, mean reversion to moving averages, pullback into the fib value zone, and then a rejection continuation higher. However, the invalidation for this trade would be if we do get hawkish comments out of the BOJ. There is some talks at the moment that the Bank of Japan might hike towards 1% or to 1%. Whether that will happen or not, obviously, I'm not 100% sure. I am pretty bad, to be perfectly transparent, at calling the yen. I've never, in my whole career, never been able to get a good trade on the yen. It's like one of the only things, like the Australian dollar, the pound, the dollar, US dollar, no problems. But the yen always seems to give me a little bit of a hiccup. So yeah, that's just a little bit of a warning sign for you. Just be very careful, because we could get some hawkish comments from the BOJ, which obviously higher rates might bring the Nikkei slightly lower. Moving forwards, the S&P 500, I've got nothing, absolutely no interest. It's just sideways. I'm just waiting for something to happen. And gold. So I'll go into gold in a second. Let me just catch up with the chat. Got stopped out on as a yen. Yeah, I'm seeing that quite a lot. Some of my members were long yen, short yen. I was short yen as well. Luckily, or not luckily, but I managed to offset a portion of my loss on New Zealand yen with a dollar yen short, so it wasn't a huge deal. But yeah, I would take caution with yen pairs right now. I'm not touching USD, too mixed for me. Sluggy, I think that's a good idea. Mood got ruined. Aussie yen stopped out. That's unfortunate. Small caps seem to be the play so far. Yeah, we spoke about this yesterday, didn't we, Sluggy? I do tend to agree for the most part. Rate cut narrative seems to be building up day by day. Indeed, it does. Check New Zealand US dollar. Okay, we'll take a look at that. Today we got weak GDP as expected. Yeah, so I'll have a look at gold, then we'll move on to New Zealand US dollar, which is just below. So with gold, I'm in a position where I can't do anything just yet, but I would like to. So the edge finder is giving gold a neutral reading, or at least it was. Let me just double check. Yes, so gold's neutral with a score of 2. So it's not really telling me anything in terms of direction. Slightly bullish, obviously positive 2, but it's still nowhere near a bullish reading just yet. And then if we account for the technicals, there still isn't really anything going on here. The only 2 entry possibilities I see is either a pullback towards the 50% retracement in the fib. That would also then bring price back towards the 200 moving average. That would be fine. I would take an attempt on that. On the other hand, if we don't get that, I would be looking for a break above this level of resistance, retest, continuation. I would look to enter on this retest. Even that, I'm not a huge fan of, unless we got a really strong move to the upside and then a nice clean pullback. If it was just a quick pop, I don't think I'd be taking that, just because this is a choppy range. I don't want to get caught in like a false breakout. So I'd need to see a decisive move above and then the retracement first. The retracement following. So yeah, that's the view on gold right now. And then New Zealand US dollar. So yeah, I think being a buyer does make sense, but I'm just a bit cautious that we might get a little bit of a hawkish tilt from the Fed, which would maybe ruin this trade. So yeah, I'm cautiously bullish, I think is the way to say that. Right now, there's no entry because obviously we're sort of just stuck sideways in this range. There's no trend at the moment. If we're looking objectively, there is obviously this bullish trend of the moving averages, but on a purely price action or purely candlestick movement, there is nothing here. Excuse me. We're not making higher highs and there's no higher lows. There's nothing happening here. So similar to gold, I would need to see a breakout above, retest, and then continuation, or a 50% pullback. Something like this. Even this, I don't think I would look to actually enter on this because I'm already long euro dollar. So if we did see this pullback, I think I'd actually just avoid it until we got a more solid confirmation. So it's going to use FX reserves for spending. What would kill two birds with one stone? Yes. Yeah, that's exactly it. So I think the yen's in a little bit of a danger zone at the moment. Hold on, let me fix. That's annoying me. How do I fix that? Here we go. Yeah, the yen's in a bit of a danger zone right now. So I wouldn't be looking to go long. I think best case is just waiting, really. I mean, if we look at the higher time frame on the weekly here, we've double topped. We've not managed to reach the previous all-time high, and we are still quite deviated from our 200 weekly moving average. It doesn't mean a whole lot. Obviously, we're talking about technicals here in a macro regime, but it's, again, just one of those factors on a technical basis to maybe just take caution. But yeah, I mean, even on the daily, if we look here, we've got the 200 daily moving average, which is providing some support. But I'm very cautious that this is a trap. And when I say a trap, I'm not talking about like manipulation, liquidity. I don't mean it like that. I mean just more of a general trap that traders will fall into, trying to buy this double bottom off a 200 moving average. When actually, if we look slightly lower down, we've got this gap that remains open. Now, in FX markets, it's rare for a gap to go unfilled for a prolonged period of time, especially a gap of this size, which we've clearly left it open. So it wouldn't surprise me if we do end up coming lower, filling this gap, and then continuing higher from there. Again, that's sort of in a perfect world if it plays out perfectly. But I would expect this gap to get filled. So yeah, I'm definitely not buying dollar yen here. Do I trade breakouts? I do trade breakouts, but not really on higher timeframes. If I am going to trade a breakout, it has to have the retest for me to enter. I will only trade breakouts aggressively if I'm scalping. So if I'm trading NQ, ES, whatever, more futures, then yeah, I'll trade breakouts. But typically on swing trading, no. Do you prefer early or late on a trade, considering they're both pros and cons? Well, excuse me. Sorry about that. I teach to be late to entries, but personally, I'm a little bit more aggressive. I'm not quite as aggressive as maybe what you would think. So I think Eurodollar is actually a good example. So I'll show you the entry here and I'll kind of explain sort of the difference between what I mean there. So the way I teach people to trade the FIB is to wait for a bullish engulfing candle close in this situation, if you're buying. So right here, if we look, we've got this bullish engulfing candle. So you could say that's late to the trade, because theoretically we could have entered right here. But especially when you're newer to trading or you've never traded fibs, you're kind of less experienced in this style of trading. There's nothing stopping you setting pending orders here, and the market just melts, and you've ruined the trade. You just go straight to stop loss. On top of the fact, if you're less educated in the macro landscape as well. So I'll always teach to be later to entries, but in certain situations, I'll be more aggressive because obviously this is my strategy. I've been trading this style for years and years. So like Euro New Zealand is a good example of being a little bit more aggressive. So rather than being on the H4, which is what I normally do, I was on the 1 hour, and that's where I took the trade here. Actually, you can see it right here on this bullish candle when I saw this wick to the upside, price coming back down, and then we formed the second bearish candle. I entered on that one. So you can see sort of it's only slight differences, but it's just small things that layer on, that can sort of define the trade. So I know that probably doesn't really answer your question. So I prefer to be more patient, get a worse entry with maybe a larger stop, but with a more or a trade that has more confirmation behind it, as opposed to being more aggressive, getting a slightly better risk reward, but then having slightly more risk that the trade won't work out. Hopefully that made sense. What's the best trending Forex pairs for EMA trend following strategies? You would want to go with sort of just the majors. So you'd want to go dollar pairs, so pound dollar, euro dollar. And the reason you'd want to go with things like that, yen pairs can be okay, but only if you know what's actually going on. So like situations like now, you would get ripped apart. But so yeah, stick with majors. So let's go to, where is pound dollar? Right here. So yeah, pound dollar. If we have a look on the H4, this is sort of general execution, H4 daily. I would assume you're sticking around those types of time frames, maybe the H1. You can get really nice trends on these ones. But then the beauty is, on higher time frames, they don't do anything. We just move sideways. Obviously, these are large ranges, of course. I'm not saying these are small by any means, but they do just move sideways. So it's kind of, I know I use this word very loosely, but kind of easy or more simple to gauge the price action on these pairs, because again, they're so liquid, and they do trend quite well for a couple of weeks, maybe a couple of months, depending again on exactly what's going on in the macro landscape. But yeah, I would stick with those ones until you get comfortable and then start exploring other things. What do you guys think will happen to the DXY if they impeach Trump, which seems to be just two votes away? I initially would think it would be bullish, but I'm not 100% sure on that. And the reason I think it might be bullish is more just because Trump's obviously known for his lower rate stance. He wants rates to be significantly lower from where they are right now. So if we had someone else come in, Trump was impeached, that narrative obviously has the potential to then flip. So the dollar might see a little bit of a bid on the back of that. But again, that's just a very quick assumption. Trading exotic currencies rewards the same as gold? I'm not sure what you mean by that, because what you get from a trade is all dependent on what you risk. There is more money to be made in exotic and emerging markets. And the reason I say that is because they can move more violently, and the trends can just be a bit more sort of aggressive. The macros don't tend to be as difficult. However, when I'm saying that, it's more difficult to get the research and get the data in the first place. Also, you've got to then account for larger spreads, higher swaps. So it's not all sunshine and rainbows, but yeah, it really depends what you mean by that question. Waiting for confirmation is cool, but if you have your buyer set up in order, limit and forget, yes, that can work. And that's the thing. I think this is where Nick outperforms me, is with the entries he takes. He seems to be quite happy being a bit more aggressive, which of course is completely fine. Whereas I wait for sort of the H4s. The way that Nick and I trade is very, very similar. We look at key levels, we draw a fib, we'll look for pullbacks and trends. It's very bread and butter, basic trading. But yeah, Nick is a good example of being a little bit more taking the trade. If the outcome doesn't work, fine, he'll take another one at a different level. Whereas I'm a little bit more cautious, so I'll take only the entry that shows me there is some buying interest first. I think that's what I don't want to speak for Nick, but that's from what I've seen. I think that's how it goes. US oil. Yeah, we can take a look at oil. Okay. So, yeah, I mean, I don't have anything for oil. It's not really a market that I trade. However, it is looking bullish at the moment from the price action. So I think what I'd like to see, in order for me to be a buyer, it would need to meet a few different criteria. So obviously we've triple topped here, and it's also actually previous support on this level as well. So clear selling interest from here. However, it looks like we might be getting these moving averages to cross on the daily, indicating that we've got obviously a change of trend. So we've already got the 50 and the 100 swapping here. We'd need to really see something like this, or I'd need to see something like this to tell me that the higher time frame trend has changed. Then I could go down to the H4 and look for some entries. So if I was just looking at the H4, I think I'd need to see a pullback towards the 200. And the reason I'm not using a fib in this situation is because there isn't a location to draw one, really. I suppose really it would just be here. I don't want to take this entry. I don't feel comfortable with that. It's a bit too compact. It's too tight. So yeah, I think overall bullish market, but in terms of fundamentals and technicals, I don't really have anything to give you, unfortunately. I don't want to sit here and try and force something or there's just no reason to. Okay, so what else could we look at? I think we've gone over all of these markets. Again, yen, I've got no interest right now. Pound Aussie seems to be pulling back. Euro Aussie seems to have a little bit of buying interest here. So in terms of the Pound Aussie, I would like to see something like this. So this would lead us back into a previous level of minor support. So we've had the break, look for the retest to the 50% retracement, and then continuation lower. And then if we look on the left side, there's still a lot of space over here for a potential correction. Now, I don't want to sit here and say that, this market's going to come all the way down to 1.76 or 1.75, but if this trend does continue to show promise and we can break through these levels of support on the weekly, it's definitely possible. But again, that is a very long-term idea. So do your own research on that one before looking to trade it down to those levels. But yeah, this would be my plan. If that does happen, is essentially just keep shorting, looking for nice moves off and then taking profits and then waiting for pullbacks, enter again. And that way I can just keep swinging that move down rather than having a large, long position that might, again, reject those weekly supports and come and take me out for half of what I could have taken out the market. Sluggies in pound CAD. Interesting. Let's see. I've not really paid any attention to pound CAD. Yeah, I mean, it looks quite nice for shorts. I'm going to assume you're short, maybe. But yeah, I mean, I think a short position makes sense here. So I don't want to take this trade, but I think if you were looking to take pound CAD, you've already got this nice bearish flip. So we've obviously had a bullish trend here, flip to a bearish trend, pulling back towards the fib 50% level, which kind of lines up with this previous low, roughly. So yeah, nice break, retest. Sorry, we've had the break. Look for this retest, and then a continuation down, maybe to these these H4 lows over here. I think that makes sense. Quite like that. I've got a minute left, just realized. Euro Swiss long and forget. Let's see Euro Swiss then. Yeah, I mean, to be honest, actually, maybe, but not from. This would be more of a mean reversion idea, in my opinion. So I think you'd really be looking for the same price action to keep repeating, or the same behavior. So obviously we low here, low, low, low. Every time we come down, we have this temporary rally to the upside, but the overall drift of this market is to the downside and the trend is to the downside. So I think you could maybe look for some sort of mean reversion and then a continuation lower. In terms of just buying and forgetting, seems risky, although it's a positive swap. So if you are a swap trader, it could be worthwhile, but in terms of general swing and sort of macro trades, it doesn't seem like something I'd be overly interested in at this point in time. Copper's neutral. I thought it was bullish for a second, but it's not. The dollar's getting a slightly positive score of 3, which is interesting. Let's just take one last final look before I head off. So Euro New Zealand, dollar ZAR, Euro CAD, Pound New Zealand, Pound Australia is still getting a bearish reading. Let's just take one final very quick look at Pound New Zealand and I'll throw the stream over. I'm not sure who's on after me. Actually, I'm not sure if it's Marco or Alan. It's one of the two, I would assume. So yeah, I would look for the trend change. We already had the 50 and the 100 flip. Look for the 200 to flip and then wait for a 50% retracement. Fib's not drawn properly there, but yeah, something like this that would also lead the market into a potential retest of this low. We've already had the break, retest into the fib, and then a continuation lower. I really like the idea of that. But yeah, that's all I have got time for today, ladies and gentlemen. Thank you for having me. I will see you all. Yes, I'll be on tomorrow. So guys, stay safe, don't get margin called, and I'll see you all very soon.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Hope everyone is doing fantastic today. Hope you guys can hear me okay and see me okay. Let's go ahead and start talking about markets here. Dollar index, right? We had a very strong NFP yesterday, and now it's starting to fade off a little bit here. I still think that we have a chance to go ahead and bounce off of this level of support here, this 96.5 level. It's a level that I've been watching, something that I've been voicing here on the channel on the live streams. So I think the determining factor of this level holding or not will be CPI tomorrow. I did go ahead and put a little bit of an excerpt or two articles here on that. One about the Aussie dollar. Basically, most of these major currency pairs are at these levels of like resistance, right? So you have the Aussie dollar, which is one, and I included that into the Telegram channel here today, just before I got on the stream here. So we're pressing up a key level of resistance here. If you go to the weekly time frame, I basically went ahead and went over the Aussie dollar. You do have some elevated inflation, but most of the rate hikes and stuff, all that good stuff is pretty much priced in here. And I think most of the fundamentals in the macro is going to be switched over to the USD as far as direction goes. So we are on the weekly time frame here. We've tapped this level once, twice, three times here, potentially four times. And previously speaking, whenever we did hit these levels, we did go ahead and fade lower. So that's kind of looking here for the Aussie dollar. If we get a risk off environment as far as equity goes, then I would like to participate. Aussie dollar short, but I think if you want to go long the dollar, there's other ways to go about it, in my opinion. One of the ways I did that was with the euro dollar. So I am in a 1-to-1 trade as far as risk to reward ratio on the euro dollar. A little bit of drawdown here, right? But we are still in this level of what could be resistance. And so I'm looking to target, this 17.5 level here. That's one of the trades that I'm in. And I'm also long dollar CAD, which is also barely in some drawdown here very early on to the trade. We're still in this support level here that I marked up, similar to the DXY. So a lot of the price action moving forward will be determined by CPI most likely. And so, we'll see how the markets digest it. We do expect to go ahead and cool off by 0.1%. So if you look at the financial juice here, CPI year over year tomorrow, we're currently at 2.6. Or it's expected to come at 2.5. So very, very slight change here. We'll see how markets digest it, and we'll see how the actual release comes out. So I'm kind of just playing this game here of being a little bit early prior to the release. NFP came out good. So if CPI comes in favor of the dollar, then this thing will really take off here. So my both positions will work out pretty well. But if not, it's okay. Another reason why I like the dollar CAD, besides the technical level and besides the overall strong fundamental data for the US, we do have oil cooling off here, right down 1.3%. I did mention this yesterday in the live stream, but looking at this level of the 67 handle here, when we've approached this level, we pretty much fade off of it, right? And the bet is, the speculation that I'm kind of playing is that we get some kind of an easing tension with US v Iran. I saw in the headlines here with Financial Juice that we did see some talks with Russia, something about pro-dollar, something like that. Here it is, Russian memo. Now, I don't know how much weight you want to tie to this headline here, but the bet that I'm basically playing is that we will see some kind of a de-escalation with US and Iran. I think both parties are looking to go ahead and ease whatever's going on over there. They're looking to talk and they're having talks, but you just see those hints of headlines like US about to seize tankers and stuff like that. So it's kind of iffy. However, I think if you do get a de-escalation, then all that risk that was priced in is going to fade off, and we'll probably get back to these levels here, somewhere within the low 60s, 50s, anywhere, past this level. And if that does happen, then the Canadian dollar will weaken, because there is somewhat of a correlation with the Canadian dollar and oil, not a one-to-one, but it is a major part of their economy. So that's kind of what I'm playing dollar CAD. Some dollar strength and then a little bit of oil weakness will definitely help dollar CAD in that sense. Dollar yen, though, interestingly, still very relatively compared to the others. So we did have the NFP, and we had a major news release and a lot of liquidity with repricing and stuff like that. And so perhaps that idea of the dollar or the yen, Bank of Japan, intervening could be playing out. I didn't see anything confirming that or not. Usually they go ahead and there's some like activity data that they release every single day, every business day. So we'll see if that's confirmed or not. But so far, nothing yet. But that's still a possible idea. And as far as other, currency pairs that I'm looking at as well, dollar Swiss, not looking to trade it just because it's showing some relative weakness, just like the dollar yen as well. And it's also prone to risk off, right? So if you get a risk off environment, Swiss will really go ahead and take the lead, and this thing can really drop. So basically what I'm trying to get at is I'm pretty much long dollar in the very long term. I think this level of support is a good one here. And you just have to be cautious as to which currency pair you decide to trade. But I think I like euro dollar. I mean, compared to the other ones, like it's technically looking pretty well, right? You had this shoot up higher, lower, you made a lower high, you could say. So if this thing continues, then we can get a slow drift lower. I like that. Dollar CAD as well. I like the fundamentals of the Canadian dollar and the US. This mic is better than yesterday. It's the same mic, man. But I'll go ahead and make sure that the AC doesn't come on and that good stuff. So actually, what I'm excited for is I'm going to be moving pretty soon, like very, very soon. It's actually happening sooner than we expected. But I'm going to have like a dedicated like studio, you could say, that I'm going to build out. So audio, all that good stuff should be nice and dandy. So I hope you guys will appreciate that. You're also long New Zealand Swiss. Alan, what is better, visualize rate expectations, US and year alone, or probably both? I mean, it's better to look at the whole curve, right? The long end, the short end. For like rate expectations and stuff like that, I look for the 2-year and the 10-year yield. I like if the 10-year yield is really elevated. Not a big fan, but look at that. You're seeing that come down here, which is good to see for rate expectations as well. So I would look at both if you can. But the 2-year yield is more sensitive to like near term stuff. So you're long New Zealand Swiss. Let's go ahead and look at New Zealand Swiss. If I'm not mistaken, it should be getting a positive reading here on the Edge Finder. If the Swiss basket is still underperforming, let's go. Yeah, look at that top of the page here on top setups. And for those that are new to the stream here, or you're new to seeing me, I also use the Edge Finder for my trading. I love the data. I like the data consolidation, all that good stuff. I would highly recommend that you guys get yourself a copy. It's actually free at the moment. You have 1 day left, so it does end on the 13th, but it is definitely worth a shot. Even if you don't have enough time to go ahead and just use it alongside your trading, it's good to go ahead and see what you have at your disposal. So if you're a currency trader, you have the top status page, of course. You have the COT data, so you can see, what people are buying and selling as far as institutions. You got your crowd data, so your retail sentiment history, all that good stuff. And you have other things that are super, super important to currencies, like real yields, carry trade scanner. So one of the things that I use for in my trading is I try to pick trades that give me positive swap. So for example, like this euro US dollar position was intentional in the sense that I'm getting a positive swap to sell the euro US dollar. USD CAD as well. I'm getting a positive swap to go ahead and buy the dollar CAD. So I try to position my trades and filter my trades to where I'm getting positive swap. Basically, all that means is when you're trading currencies, if you hold it for 1 day or more, like if you hold it overnight, you have to pay the brokerage something, or the broker pays you. I'd rather get paid than have to pay something. So I pretty much filter these things by the carry trade scanner. That is just one of the many, many tools that you have at your disposal with Edge Finder. So although you can't, it's only 1 day left, you can't trade much with it, but definitely go ahead and see what you can use. I promise you will love it. You can do that by just doing the Telegram channel there. You can join the free Telegram channel, and then you will be able to enter that. And yeah, just explore it, man. Have fun with it. Alan, off topic, do you mark up your support and resistance levels for swing trading? Yeah, I do, but they're pretty simple, right? So when it comes to currencies, they're mean reverting over the long stretch. the best levels I could suggest, John, would be the weekly time frame, right? So you will obviously have these micro structures. Like, for example, if you go to, let's just go to a good example of this would be dollar Swiss. Dollar Swiss, you have like these micro levels. Like if you go to a 4-hour time frame, let's see. 4-hour time frame, like you could say this is a level, for example. This is just a hypothetical. I'm just doing an example here, but you could say this is a level, and you can play it off, right? And this looks like a support and resistance type situation. It's a little channel right in the 4-hour time frame. However, over the long stretch, like if you go to a weekly time frame, I like these levels a lot more. So like this right here, this was a channel that I played for some time, up until 2025, up until now. I was kind of playing in this playground here. And so currencies tend to do that. They tend to bounce around. So if you can find a currency, like for example on the Australian dollar, on a weekly time frame where it's hitting up a predefined level of resistance, it is a good playground. You are getting a premium if you want to short. Now, if you want to go long, that's a different story. But if you want to short the Aussie dollar, you are technically at a premium long-term horizon weekly time frame level of resistance. So that's kind of what I look for when I draw my zones. I look for the weekly first and then the daily as well. So if you look at the weekly still, like this right here, we broke out of this level. This could now act as a level of support. So let me go ahead and draw this out for you so you can see what I'm talking about. Level of resistance right here. Let me switch this to yellow. Level of resistance, level of resistance, level of resistance. Now we broke above it. So now if we were to retest below, this could act as the level of support, this bottom one. You see that this was once resistance, this was once resistance, this was once resistance. So if we were to trade back lower, most likely than not, buyers will step into here because it's a predefined level. And I love seeing those levels on the weekly time frame, but it's definitely possible to go ahead and see those on the daily 4-hour as well. It just depends on your strategy, your time horizon. I'm a swing trader in currency, so it works in my favor to go ahead and let them ride for up until a week or 2 weeks, especially if you're getting that positive swap. You can actually collect income for that. That's what I did with dollar Swiss. I was in it until the early of December because it was super slow, and I collected some positive swap. And the positive swap, all it does is you're not going to make a killing off of it by any means, right? Unless your position size is humongous. But positive swaps just helps you offset, some losses, some trading costs like spreads and all that good stuff. So that's why I like that. Can you explain why indices are getting a low score in the edge finding, even though the macros were good yesterday? So good thinking there. So NFP, or the Fed right now, is between two things, which is elevated inflation and jobs, right? They're juggling the two. They put a lot of emphasis into the job market, and they were trying to save the job market, and they were trying to save the job market by cutting interest rates. Now, if you saw labor data improve a little bit, then they don't need to cut rates as much. So although we had some very, very strong NFP data, you did have the idea that the Fed can hold rates for a little bit longer because the Fed, or the job market's taking care of itself. So if you go to NFP here, you can see that for the most part, if you look at this chart, this is historical data from January 10th, 2025. It was doing well, but then you kind of saw like a little bit of a slowdown in the job market as far as NFP goes. So the Fed was really concerned about that. And in order to save that labor market, they were looking to cut rates. But yesterday, we saw a better than expected outcome, 130K versus 66K, 70,000 forecast, right? That was give or take. And so the market said, well, maybe the Fed doesn't need to cut rates that much, right? So for equities, that it's bad. Equities thrive off of lower rates, and the dollar thrives on higher rates. So it's an inverse relationship between the two. So, for lots of reasons, lower interest rates can promote growth, lower borrowing costs, people can expand, yada, yada, yada. Versus for the dollar, higher interest rates means it's a higher yielding currency. And so money tends to flow into that currency. So that's why you see like the Aussie dollar, John, you can see that the Aussie dollar is getting very, very strong here. The reason for that is because their interest rates are expected to come in higher. And so you'll get a higher yield for being in the Aussie dollar versus the US dollar or versus other currencies. For example, like if I pull up Aussie Swiss, which Aussie is expected to raise their interest rate, but the Swiss is at 0 to almost negative, you can see how this thing has been drifting higher over time. So Aussie yen as well. Well, the yen's getting a little bit of strength here, but I would assume that, yeah, it's pretty high, right? So the yen has, negative real interest rates, especially in the recent times, versus the Aussie dollar that's expected to rise over time. So you see this upward trend. So currencies The backbone of currency is what moves them is interest rates. And so I will show you this, guys. Interest rate projections. Everyone has access to this with the Edge Finder. You can see, and I'll go ahead and toggle Aussie dollar so you can see how I'm illustrating this. But let's do Aussie dollar versus the US dollar. This was like my biggest, my trade, the one that I was talking about for the most part. You can see that the US dollar in red for some time was going to be the higher yielding currency. It's kind of shifted now, but you can see that the Aussie dollar is now, in blue. It's showing bigger blocks than the red in blue. So you can see that interest rates are expected to go in higher for the Aussie dollar. So that's why money flows into that one. And you can do that with every single currency pretty much. You can do CAD, Swiss, Euro, Pound, Yen, all that good stuff. You can compare interest rate projections and catch these overall big trends. What do you think on USD CAD? Yeah, that's a trade that I'm currently in right now, crypto meets. So USD CAD, I'm long in it. I'm still in a little bit of drawdown here. This trade is pretty much near break even here. But my thought process with that is we saw some stronger than expected NFP numbers. Interest rate projections for the dollar, pushed back a little bit from June to July, give or take. So, they were unwinding some of those rate cut bets by tad. But then you also have CPI tomorrow as well. That'll determine the trade. But I think it's a good technical level. This is a level of support that has been respected in the past. You also have oil trading lower here today, continuing that trend there, bouncing off of this level of resistance. And for those that don't know, the Canadian economy has a strong correlation to oil. That's a big part of their economy there. So if oil rises, Canadian dollar rises. If oil falls, Canadian dollar falls. Similar to like Australian dollar and gold. If you have a strong Australian dollar or a strong gold, then the Australian dollar will most likely rally off of that. So, yep.
Hello. Hey, can you hear me?
Yes, I can hear you.
Okay, great. So sorry to interrupt you.
No, it's I wish I could flip the camera, but I have like my main monitor here and I have a smaller monitor to my left. So I didn't see you join, and I just got the message from James that you're on here. I am so sorry, Marco, that
No, that's totally fine. I didn't want to break up your thoughts. So that was some great analysis that you did.
No. Feel free to break it up anytime, man. Anytime.
So how are you? What have you been looking at?
Yeah. So the dollar CAD, long that one, a little bit of break even there, and also euro dollar, also in the red a little bit here. But this one's more of a one-to-one trade. I'm just trying to see if this level is going to hold or not. This resistance here. So once we got over here into this area, we did have some talks from the ECB saying that they're willing to intervene if the euro becomes super strong. It hurts them a little bit. So I'm kind of just playing that dollar strength here, but we'll see what CPI. I mean, CPI tomorrow can definitely go ahead and hit my stop loss real quick. So we'll see. How about you?
Oh, so I missed that. So the ECB was talking about a possible intervention. Was that on Financial Juice?
We could have been. I'm pretty sure I saw it there, but yeah, anything plus 120s, they don't like that. Let's see.
Okay. I missed that. That's good to know.
I think it was like guard.
Yeah, every time I try to search something on Financial Juice, I don't get what I want.
And it was some time ago, so it might not pop up here, but I can definitely go ahead. They were basically saying though how their monetary policy is pretty much flexible, so they're able to hike or lower interest rates as needed, and so strong euro, whatever, they probably would have lowered interest rates, and so markets reacted to that pretty strongly there. But then you had FOMC right after that, and so that was what really took this thing lower here. That FOMC, that neutral to hawkish commentary.
Yeah. Were you surprised by the NFP print?
Actually, I was. I thought it was going to come in line, especially because I had a feeling that this is just a speculation, but like, keep withholding data. Like maybe they're withholding bad data. That's kind of what was on the back of my mind. So I was definitely surprised to see that big number. And honestly, what was more surprising was just that the dollar really didn't move much. I mean, you see it here doing better than it was yesterday, or worse than it was yesterday. You have dollar yen still continuing lower here. So I'm pretty much thinking like, CPI tomorrow would really go ahead and take the reins as far as where it goes, because you have dollar index just here at this level of support or resistance, whatever you want to call it. Like we had this flush lower here, and we'll see. Do you have an idea of what it's going to look like tomorrow?
Well, no, but BLS is reporting on it. So essentially, if they were gonna like fumble the NFP, they're probably gonna mess with the CPI print as well. I would think. What is most important is bad price action on the dollar. So even though we got a super NFP, really bullish, the dollar just sold off, which tells you everything you need to know. It's good news, bad price action. That in and of itself is just bearish. So if we get like a dollar bearish CPI print, meaning if we get lower inflation, I think the dollar just keeps on dropping.
Yeah,
because
I think
it's
the
gonna be
lack.
then bad news, even worse price action, right?
Exactly.
In
I
my
think
mind.
if it reacted so poorly to the very strong NFP, if it comes in cool, like I think it's really going to react to that in a negative way. And so that's kind of the downside risk that I have at the moment with the two trades. But I'm not looking to put anything new on or anything after that. So we'll see how it plays out.
But you're long euro dollar, right? So if dollar
Short
drops,
euro dollar.
are you short? Oh, okay, I
Mhm.
missed it. Okay, yeah. Then that would be a bit of a bearish risk for you. But
Yeah.
again, it's all about the probabilities.
Right. Aussie dollar though, I mean, if the CPI comes in cool tomorrow and dollar fades off of that, this would be a monster run up. I think the next level that I would look at here would be something like this. So in the case
Mhm.
that my trade doesn't work out and I hit stop loss, then I would look for some kind of a break retest of this right here. This Aussie dollar at 7,600. I think that's the next level here, the obvious one, of course. But that would be a monster run up for the Aussie.
Yeah, I would love to get into the Aussie dollar. I just need a pullback. That's kind of
Yeah.
it. I cannot justify getting in at these levels, especially now that we are on this crucial level of resistance. So that's a no for me, and I just need a pullback. If we drop to 0.69 something, I'm gonna be in. Absolutely, I think that catches up with the 20 MA. So far, favorite currency pair, definitely Aussie dollar.
Me too. The only thing that concerns me about Aussie dollar is that most of these rate hikes have been priced in already. So how much more are you willing
Mhm.
to price in? I don't know. And what that looks like on the chart, I don't know. So
Mhm.
that's kind of why I'm hesitating on this. And you would need some kind of a clear structure. But this thing has been running up for some time, and I mean, when things have momentum behind them, they have momentum behind them.
Yeah. Well, I still think the interest rate differential is something that is higher than the price. So we know Forex should follow the interest rate differential. Unfortunately, I can't bring it up here on TradingView. I need to structure it, and it takes a bit of time. But only recently have we started to follow the interest rate differential with basically RBA hiking and the Fed cutting. This was the only move. This was kind of the breakout out of the flat range. So I still think we should follow the differential some more, meaning we should appreciate some more. Even though the hikes are, you can say, priced into the market, I still think this kind of wakes up, goes up, follows gold if gold continues higher. So
That's
for
true.
gold, I think the edge finder printed bullish, if I'm not mistaken. Let me see.
I think you're right on
Gold.
that.
Neutral reading. Okay, so back to neutral. We were bullish yesterday, but I was waiting for the NFP to update. It did update, and now we're neutral. So it's not good for me to get in. I want a bullish print, and I'm waiting for the CPI print, if I'm being honest. So waiting for the NFP, that was bearish gold. Waiting for the CPI, we're going to see what happens. Maybe next week we get a bullish print after the news passes, and then I can finally get into my gold longs.
That's true, and you bring up a good point. There's other drivers besides just the Aussie and the dollar. Like you have big export commodity when it comes to gold and all that good stuff. Like if gold shoots higher, then Aussie dollar will follow suit with that. Or if you get risk on with equities, for example, too, that'll definitely go ahead and boost the Aussie as well. And like you said, you actually opened my mind to this. But although the Aussie dollar rate hikes are priced in, you still have to price in if there's more pricing in of dollar easing as well, Fed easing. Which will definitely go ahead and shoot this thing higher. So the stance, though, I'm going to be very cautious. I don't want to be caught in a fake out or anything. So if we do get a breakout, a retest of some sort, and then trading it higher. But I think if we get a strong dollar or a weaker dollar, I think there's better place to go. Dollar Swiss,
are you navigating this? I mean, it's super weak. Um, I mean, it has a lot of strong momentum behind it. Are you looking to like intraday trade this thing lower or swing trade it lower, or is it too far stretch for you to touch?
To be honest, on the dollar Swiss, I'm just waiting for lower levels to buy. So
Okay.
waiting for that huge wick for us to reach the huge wick, and then I'll be interested in getting in on buy setups. Until that happens, I won't do much. I
Yeah.
don't think I have a massive edge buying or selling at this moment. What about you?
Yeah, me too. I have this alert here at the 7,200 or shy
Mhm.
of it.
Yeah.
So yeah.
Yeah, same thing. Same thing. What about the story in Japan? That's heating up. So if I can just show you my chart on Japan. Just a second. Okay, so big story over the weekend. Takaishi and her party won massively. They've gone super right wing. Japan has gone super right wing. She's kind of she's a friend of Trump, you can say, so similar to Trump. And this created a massive sort of buy Japan narrative. Nikkei gapped up, dollar yen crashed lower. So my two trades I have on the moment is buying the Nikkei, and I sold euro yen. So I sold euro yen because I do believe this could be a start of a bigger downtrend. And the euro is not doing great at the moment, if you ask me. So I think the yen gains value. I think the carry trade unwinds a little bit. We should get higher interest rates in Japan. I found a great website that shows you central bank rates right here. So the BOJ, by the end of 2026, we should go from 0.75 to 1.34%. That should make the carry trade unwind even more, which means dollar selling, yen buying, yen gains value across the map. Also, they created a bit of a ceiling on USD JPY because they did a rate check, or it was kind of a coordinated rate check at 158 something. So we know that this is the ceiling, and the price is probably not going to go above here, which means the path of least resistance is lower, which means I'm starting to get interested to sell the dollar yen on rallies. And also you have divergence where the BOJ is hiking while the Fed is scheduled to cut. So current trade 3.63, and by the end of 2026, 3.09%. So again, clear divergence with the central banks. So many reasons. The main reason for me being kind of buy Japan, bullish Japan, is the new government. I think it could be a regime shift. I think Takaishi could implement her policies, so massive spending, massive tax cuts, which should bring money back to Japan. We know that the money has been steadily flowing from Japan to the US over the years and to other, let's say, countries. But now it may start coming back to Japan, which not only benefits the Nikkei, it should also benefit the yen, because to buy the Nikkei, you need the yen. Also, if you want to invest into yen bonds, you need the yen as well to buy bonds, I believe. So what do you think about the story? And are you looking to get into some plays with this current Japan sort of strength?
Yeah, you've brought up a lot of good points, a lot of good confluences, and you have a very strong case for that. I'm actually like looking at that. I'm eyeing this right here just from a technical basis. But if you make a new low here on dollar yen, I think that would open the gates for more selling for dollar yen at least. I don't know how I would participate with it, dollar versus yen, because the dollar in itself is doing somewhat okay as well. I like the idea that you chose the euro yen with a weakening euro versus a stronger yen. I think that'll be a better play, and it's actually made better structure than dollar yen. If I were to play the yen, I would do Swiss yen. However, it's just so tricky. You're pretty much the highs here. You would need a very clean shift, and I have an alert on this trend line here. So if we see like a very fast, and I think it would happen pretty fast too, if you see some kind of a major unwind similar to like August 5th. Remember that August 5th sell-off?
Oh, yeah.
That would happen pretty fast. So I have this alarm here. That would be the way I would play it. If I don't get an opportunity, like let's say I missed that whole thing,
then I would prefer to just wait for dollar yen to be picked up at 140 or something like I did last year or 2024. That would be a better play, but we are some ways ahead. But we do know if we just look at the past here, it can happen pretty fast. So although it looks like a long time away, it can be here sooner than we think. So I think that's going to be the way. So I either play the Swiss yen if I see a clean technical break and I'm present to participate. And if I miss it for whatever reason and it starts shooting lower and I just have to, if I'm in the position where I have to chase price, I'd rather stay away and then just wait for dollar yen at the 140. I think that's a good level to pick it up where you have pretty strong risk to reward ratio. Now, do I target like the 160 again? Probably not. Maybe just somewhere like 150 would be a better profit target. But that's how I would play it.
Yeah, great points. But what do you think about the risk-off scenario? Because in a risk-off, money would go into the Swiss and the yen, but it would go out of the dollar and possibly out of the euro. And with Iran being kind of a possible risk-off scenario with the US-Iran relations, I think that could be another added catalyst why dollar yen and maybe euro yen fly lower. So if that heats up, I think selling dollar yen, selling euro yen could be a bit more powerful than doing Swiss yen. But maybe I'm wrong. Maybe I'm wrong with the correlations there. What do you think?
I would ideally you get some kind of an answer with USV Iran, like it's behind us. But if it's still lingering around, then that's true. Swiss yen will be relatively strong compared to the yen because they're both safe havens. That's kind of what I would have to wait for. That's kind of more, I'm more in the camp of like just wait at the 140 for dollar yen. But we'll see if it's still lingering around. It's still unresolved. Then that's definitely a possibility. And dollar yen would be the better play, or euro yen would be the better play as well. Also, too, though, with war, especially if the U.S. is involved, the U.S. acts as a safe haven as well, just because of our major superpower. Yep. So that'll be pretty tricky to navigate. But hopefully, and it seems like we're getting some kind of a progression on that front as well. Like they're having talks. I know we keep seeing headlines like they're sending carriers or they're ready to seize another. But from what I've seen, both sides are willing to talk, and I think that's a good sign.
Yeah, that is a good counter argument, because if the conflict resolves, we could see dollar yen going higher because it's going to be also like a bit more risk on, so money should flow out of the yen. So could be sort of a negative if the escalation resolves itself. But that's something we just cannot forecast or control. We could say that Trump always puts out crazy good headlines, but nothing gets done in the background. But then again, something could get done because he did manage to resolve, I think it was Israel and Iran conflict. I think he managed to do something on that front. So you never know with those things. Best to just focus on the data, on the numbers. So gold, do you have anything on gold and silver? Well, they have been doing kind of nothing, but maybe with this recent NFP, you have changed your mind a bit.
Not really. Like you're right. They haven't really been doing anything. You look at the last 4 days, they've been kind of just slowly drifting higher. And by drifting higher, it's like very minimal. But I think I'm just gonna stay away from gold, really. Unless I get here, I'll move my alert, something like this. But like if you get like some kind of a retest or a pullback into these levels, like the 4,400, 4,700. Then I can look at it. But if not, like, I don't know. I'm not going to play it. Like you had the idea that things were going to, chop lower and continue that downslide, but it didn't. Same thing with, I mean, silver is pretty much showing that, but with gold, it's a little different, right? It's more established, but I think silver was more memified than anything. But with gold, yeah, I mean, it's doing its thing. I wouldn't trade it long or short. I mean, you're just in the middle of this whole thing and things can go either way. If you get a de-escalation, then gold will fall. But if you get an escalation, this thing will rise. So it's a 50-50 chance. And you really can't predict something like that. You can't predict if something's going to cool off or get fired up again. So with gold, I'm pretty much just on the sidelines.
Cool. Yeah, I would be happy to take a stab long if we do get a bullish print on the Edge Finder. So waiting for that, but I definitely want to see the CPI print. It's tomorrow, right? CPI tomorrow, yeah. So gold, that's pretty much the same story that we had for the whole week. Crypto or Bitcoin also hovering well, looking pretty bearish overall, but kind of hovering at this level. I wanted to ask you, so if you talk to other traders or you look at social media, would you say that the interest around crypto has died down?
I don't know. I mean, I haven't really seen any very like polarizing sentiment, to be honest with you. I did see a clip this morning that Michael Saylor was like super bullish here. He's like, it's gonna turn around, it's gonna turn around. I saw that clip right before I got on. But I think like you mentioned, right? If the Takaishi and the global rate hike, if you will, right? The movement into the yen and stuff like that, if that continues to play out, and it seems like it, because you see like the price action is very obvious. But if you continue to see a global rate hike, and for the person that's in the chat here, he asked about crypto, do you think it'll die down? I'll give you my personal opinion. I think that the global rate hike idea is still very much in play, and I think we can see a little bit of a slide down lower. I think 50,000 will be a good level to as a target, like if you're short crypto, but also a target to pick it up at a discount. So that's kind of my idea there. I don't know. I think it can slide further for sure. Like I haven't looked at other ones, but I'm sure the crypto arena is struggling as well. You see ETH is struggling. So do you think it's kind of over? I know you educated me on the halving cycle, and it still hasn't ended, right? It's good until the end of Q4 of 2026. So I think there's a lot of things playing against crypto.
Yeah, I would say the narratives keep flipping, and there's no one single narrative pushing the price higher. But what's super interesting is latest narrative was Bitcoin was digital gold. Gold has been absolutely flying, Bitcoin not so much. Then it was Bitcoin is following the Nasdaq. Nasdaq has been staying flat, Bitcoin not so much. So as far as sticking to a specific asset and calling Bitcoin the alternative doesn't seem to be working. And Bitcoin just keeps on selling off on negative news and staying flat on positive news, which is pretty problematic. But it's just what Bitcoin does. 50, 60, 70% corrections. That's the name of the game. I checked my ledger because I have some investment in crypto, and I'm actually below my entry level. I think I entered around 70 something. So now I'm below my entry level. But I think long term, Bitcoin does go up. I think we're just stuck in this crypto winter. We also need Saylor and similar companies to I'm sorry to say, but disappear, because I think he's just doing some crazy stuff. And then once we clean that up, we could possibly go back to all-time highs and maybe even more. When will it happen? Few years, maybe. The last few crypto winters, they lasted for 4 or 5, maybe even 6 years, until Bitcoin woke back up. Ethereum, I think, looks even worse. Ethereum, just approaching these lows. There's no action. There's no bullish narrative. There's no real reason to own Ethereum or Bitcoin at the moment, except for a really, really long-term investment. So that's kind of my take.
Yeah, it's like you said, it seems like they're attaching labels to crypto, or the reason behind the fall, to justify it until it's proven wrong. It's kind of like they justify whatever's convenient. I think that 50,000 level, again, I don't trade crypto. I'm not the most knowledgeable person in that. So perhaps the questions are better handled by you, Marco. But from a technical perspective,
I'm a crypto noob as well.
That 50,000 looks pretty okay here. But I don't know how it reacts, but if you see like the overall crypto basket, like Ethereum and stuff, just continuing to plummet, I'm sure that has some effect on crypto or Bitcoin as well. I think Bitcoin is the more established one out of all of them, but that's kind of what I'm looking at here.
Yeah, the thing I'm mostly interested in is what you mentioned. That's the carry trade unwind. That's like borrowing the yen being super expensive or starting to become expensive, which makes or creates less money for investing into risky stuff like Bitcoin and like Nasdaq, even like artificial intelligence stocks like Nvidia, Google, Palantir, all of those guys. So that's kind of the big story for 2026, I would say. Possibly another carry trade unwind. The last time it happened, it was a big one on USD JPY. I can bring it up here. It was 2024, July and August, just a massive sell-off, massive meltdown. had repercussions for the whole market. And the best way to approach this is, well, you could position yourself long on the yen, or maybe even long on the Nikkei. That's at least what I'm trying, and we will see what happens. Will it stick? It may stick, it may not stick. You know, our win rate is usually 50-50. The most important part about it is big winners, small losses. And I've noticed, like, traders online, the best of traders online, they are fools 50% of the time. So 50% of their predictions or trades lose and they look like fools, but 50% work out, and the winners are, again, far bigger than the losses. That's why they make so much money.
Yeah, yeah. Most of like the bigger traders that I've kind of like looked into and everything, like you have this one guy, Lance. I like Lance a lot, but basically most of their career P&L is made up by a handful of trades a year. So for the most part, they're surviving, they're getting the base hits, and then you get 1 or 2 home runs a year that really make up a substantial amount of your P&L. And that's pretty much what it is, right? You got to be on the lookout always for those things because they happen pretty fast. Like Lance's biggest trade was on the yen, the August 5th sell-off. That was kind of what he played at. So yeah,
What's
you're
his
right.
surname?
I'm sorry.
What's his surname?
Brightstein.
Is
Lance
he connected
Brightstein.
with SMB Capital?
He was at a firm here in Chicago in Trillium, and then he moved to New York, I think, and he's working with SMB Capital, but he's still involved with Trillium. But he's an equity trader.
Cool. Yeah, I've seen his videos online. He seems like a really successful trader. So yeah,
he's probably made over like 100 million in verified profits for his firms.
Damn, that's a lot. That's a lot.
But Marco, I will leave you to your solo segment here. Do you have a giveaway to do today?
Yep, I do.
Okay.
So
awesome.
Make sure you guys stay with the stream because I'll be giving away a free challenge.
Free challenge accounts, and I definitely recommend everyone join the Telegram channel so you can participate into the free Edge Finder. Even if you have 1 day left, go ahead and explore what the offerings of Edge Finder, see what works for you, see the tools that you have at your disposal, and then definitely go ahead and buy it. So thank you, Marco, for your time. And again, I apologize I didn't see you in the stream earlier today when you hopped on.
No, it's not a problem.
But I promise I will pay more attention to that later.
No, it's not a problem. You did a great analysis, so it would be a shame to cut you off midway.
All right, well, stick around for Marco. Again, free challenges and everything and great analysis. So we'll see you again. See you, man.
Thank you, Alan. See you.
Alrighty.
So let's continue with the solo segment. Let me put in the link for the giveaway. Let's see. We have the form. I think most of you are familiar with the process. I'll post the link to the form in the comment section. Fill it out, and you will enter into a wheel of names. Then we do a random pick from the wheel of names. And after my segment, I will send you the link to the free. Let me see what we have today. In my files, we have a 5K one-phase account. So 5K one-phase account, fill out the form, and you'll enter into the giveaway. By the way, so the A1 team set up the form. I think it clears every week. I think it clears on a weekly basis. So your email works for 1 week. Once you enter that email, it won't work for the rest of the week. You can use a different email if you want. That's completely fine. But 1 email per week for now, and then maybe we'll change it in the future. Okay, just a heads up. I think that's it. I think it's either on a weekly or a monthly basis, but I think it's weekly. Looking at the charts, looking at the calendar. So calendar right here, NFP big shocker, 130K, forecast was 66. Unemployment rate went down. Pretty good for the United States. Unemployment claims, not really so important. I found the market reaction from the claims is not that big. Then we have the core CPI, CPI year on year. That's what I'm looking at. So that's what I'm waiting. That's going to be tomorrow at 14:30. We do get the Swiss CPI as well, but of course everyone is looking at the United States. My watch list. Nikkei. I have a long trade on the Nikkei. currently in some pretty nice profit, although it's pulling back today. Trailed the stop loss to 53960. Second trade is on the euro yen. This is a new position that I have. It was a signal in the A1 Trading Discord, by the way. And if you want to join the Discord, there's a link in the description, and you can use the code Marco to get 25% off. So you get all of my signals, all of my knowledge, all of my education. It's part of the Discord, and you get stuff from Nick, Iwin, Chris Pulver, and of course, Alan. See you in the Discord. Any updates about this position, any movement of the stop loss is gonna be updated in the Discord for sure. So the reason I took this position, what I said when I talked to Alan. So we had major win from Takaishi's party. Takaishi, new Prime Minister of Japan. Major win. They're a right-wing party. They are good with Trump. They want to invest into the military. They want to conquer communism. But I'm not sure how that's going to reflect in the markets. But that was one of their one of their goals, if I'm not mistaken. They're always doing something with China. What we want to know is what will they do to the stock market and to the yen? Well, from my reading and my analysis, especially from the stuff I've read from Brent Donnelly, they are bullish for the Nikkei and they're bullish for the yen. The carry trade is unwinding. People are selling the dollar, buying the yen. We are expecting higher rates from the Bank of Japan. We're expecting rate hikes that should be bullish yen. And they created sort of a ceiling on dollar yen by doing a rate check. So we know this is a crucial level. We know that they're not going to let the price go above 158, 159, 160. We know they're going to do an intervention at these levels, and they may be doing interventions if we continue pushing higher. Okay. So that all, the things that they're doing is attracting money from the world back to Japan. Money has been flowing out of Japan for the last, 5-10 years, and it may be starting to flow back. As it flows back, it's going to go into the yen. That's why I'm playing the short euro yen. Stop loss is in. I don't have a take profit. I'm just probably going to use a trailing stop loss, or I'll have some targets in mind. For now, it's just an entry. Just a second. So for now, I have the entry and I have the stop loss set. Okay. Aussie dollar, favorite currency at the moment. I'm just not getting any opportunity to buy. I'm just not getting a pullback, which is problematic. I want to see a pullback to the 20 MA, and then it's game on for me to look for buy setups. Or if we retest, let's say this level, well, not maybe this level. If we break out from the resistance, if we break out from here, let me show you. If that happens, I will look for a retest of that support, because resistance becomes support. So that is on the radar. Again, Aussie dollar, RBA, hawkish, expecting higher interest rates in 2026. We don't have it here, unfortunately, so I can't show you. But for the Fed, we're expecting lower interest rates. That is why I think this thing continues going higher. Any giveaways for today? Yes. So fill out the form. Okay. I'm going to post the form one more time. Form is right here. Fill it out, submit, and in 1 minute, I will put your names in the wheel of names. And we will pick the winner. Back to the charts. Aussie dollar, favorite currency. I'm just not getting a pullback. Gold, very interested in buying, but the Edge Finder is printing a neutral reading at the moment. So if we can actually see what's happening there. Why did we flip from bullish to neutral? If we open it up, let's see. So what went down? Retail sentiment seems to be flipping from bullish to bearish. But what also went down is the NFP. So the NFP printed bearish for gold, and unemployment rate printed bearish for gold as well. So that's what happened. Okay. Pound Aussie is the last thing I have. I think the pound is pretty weak. I think the Aussie is super strong. So I want to sell the pound Aussie if we reach the 20 EMA. Hopefully we do. So far, we have just been trending lower with a lot of force and with minimal pullbacks, which is problematic, which makes things tough for me to get in. Yeah, makes it tough for me to sell. Time for the giveaway. Let me see the submissions. If I have all of your information. Today is the 12th. Yep. Okay, awesome. We do have it. Copy all the names. Okay, then I go to the wheel, paste, spin. Let's see. Okay. Ruguru B, congrats on winning. It's going to be a 5K one-phase DNA funded account. After my segment, I will email you with the code for the free challenge. All right. By the way, if you didn't win and you want to get funded, we have the discount code A1Live, 25% off any DNA funded challenge. This is specifically for you guys. 25% discount for you guys watching the streams. A1Live is the code. This is my personal account. This is a two-phase 25K account. Currently, I have a buy on the SPX, buy on gold, buy on Aussie dollar. SPX is negative, rest is break even. Profit target, I'm currently at 1.3K, so somewhere in the middle, and trying to pass the phase one. So far, I've had a great experience with DNA Funded. They're backed by a big broker. There's a serious team behind it. It's not just a couple of 18-year-olds running the thing. So you're expecting longevity. You're expecting them to be here for the next 10 years. The best part about it, I would say, is the price, because with the A1Live code, you get 25% off. And then you get a really, really good price. So check it out. Let me see the comments. Marco, I just went long Aussie Swiss. Do you plan to sell CHF JPY? Aussie Swiss, I don't really see a massive edge behind Aussie Swiss, because I don't think, are we getting a reading here? Let me see. Bullish, we are. So if you want to look at the edge finder and you want to look at technical analysis, you want to look at the daily chart, this looks pretty good. So following the 20 MA, and again, edge finder looks bullish. So I do like this trade. It's not for me because I don't know much about the Swiss franc, but just by looking at the edge finder and the daily chart, it looks okay. It looks fine. CHF JPY. You guys seem to love the Swiss. I don't have a plan for Swiss yen. I would not look to sell it personally. Let me see if the edge finder is giving a reading. CHF JPY. CHF JPY. A neutral reading doesn't give me a lot of confidence. Again, these currencies are pretty similar. During risk off, if there's some uncertainty, if there are any issues in the world, both of them go up. So for me personally, I prefer to sell euro yen, maybe even dollar yen on rallies. That is what I'm looking at. So euro yen, dollar yen on rallies, I like more, because I do personally believe we're going to get more uncertainty. I don't think situation with Iran will clear up. I don't think that Trump will stop with the tariffs. Personally, I think in 2026 we will get more uncertainty, which is bullish gold, bullish silver, bullish yen, bullish Swiss. That's kind of the rule. And even bullish dollar, yes, bullish dollar if the US goes into war, if the US starts a war with Iran, but it should be bearish euro for sure. That's why kind of euro yen seemed good, seemed like the right play. So that's my thinking behind That's my thinking behind choosing euro yen from all of the things that I could have went short. Marco, on your euro yen sell, do you feel comfortable leaving your stop loss in the middle of the range? Yeah, because I'm looking at the 20 MA. Usually on daily chart, my main focus is the 20 MA. So if the 20 MA keeps on respecting the price, I think just moving the stop loss and being above the 20 MA makes a safe play. I don't care that it's kind of in the middle of the range. You are right. That's a good question, but I couldn't have put it above the range. It would have been too big. Then the stop loss would have been massive, which is not the best thing to do. So above the 20 MA makes sense. I do expect a pullback on yen pairs for short term. Okay, cool. I'm looking at more of a longer term play, so it's about the time frame you're looking at as well. Crazy HHHHH. I don't see any news that came out regarding the CAD. Okay. Marco, some people put all of their savings in MicroStrategy. I know it's pretty bad. It's pretty bad. It's pretty bad. I just think Saylor, he screwed up. He did some shady stuff. He basically sold MicroStrategy at a much bigger premium compared to Bitcoin. You would have saved a lot of money by just buying Bitcoin, and you are massively leveraged by buying MSTR. That's what from what I'm personally seeing. So MicroStrategy is great if Bitcoin is going up, but when Bitcoin is in the crypto winter, it's a pretty bearish story. It's a pretty bad story. That was awesome today. Thank you, Alan and Marco. Thank you very much for the feedback. I really enjoyed it. My favorite segments are these segments where I do analysis with Alan, because we get to bounce ideas back and forth. What do you think about China? Not sure about China. Something that I know about China, kind of the only thing I know, is that they are buying gold massively. They have been buying gold. They will continue to buy gold, and they want to hedge their exposure to the Chinese yuan currency, and they want to hedge exposure to their real estate market. I think their real estate market is in massive problems. Let me see. China 50. Is this the stock index? Am I mistaken? Let me see. HK 50. I've never looked at this. Okay, it's actually going higher. But if you zoom out, overall, not a great story. I just don't think this chart instills confidence. This is the Hong Kong 50 index, okay? I don't think this chart instills a lot of confidence in investors. China is a pretty closed off market. It's not a free market like the United States or Europe. It's definitely controlled by the government, and it's pretty unsafe to park your money into the Chinese yuan and into the Chinese stock market. That's why people living in China are buying a bunch of gold, because they want to hedge their exposure to their government-controlled markets. So I don't want to touch China. I don't have any opportunities to even buy China. Maybe I do for IC markets. I don't know, but I'm not interested. Let's see. Last thing for today. What is the last thing we can look at? Maybe oil prices. Well, things seem a bit slow. Like only the yen seems to be catching a bit. See, yen seems to be catching a bit, which is pretty nice. But other things seem to be slow. And one more thing I'm going to show you is the bond market. So bond market, Japanese bond market, it's starting to go up. It kind of broke out of this range in 22, 23, but now it's starting to go higher and higher, which is pretty good. So this attracts money into Japan. This attracts money into the yen, and possibly attracts money into, well, of course, into bonds, but maybe even into the Japan's stock market. That's why I also think because we bottomed out a few years ago. We bottomed out on the bond yields. That's why I also think money is going to flow into Japan. So just wanted to comment on that. That is about it. You can catch me tomorrow. I will be doing a giveaway. You can catch me at, let me show you, A1 live stream schedule. 9 a.m. Eastern Standard Time. That's when I'll be streaming. So good luck in the markets. Let's see that CPI print. That's going to be a pretty important one. Good luck. Yeah, basically good luck in the markets. And I will see you in the next stream. Goodbye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.